Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and it is here. It is the April 14th, start that again. Good morning. It's Darren Hancock here, and it's April 16th on a Tuesday, 2024. And what a day it is. Yesterday was nice and sunny, 17 degrees here in Canada. Today, snow. It looks like a winter wonderland out there right now. Yep. Winter freaking wonderland. Can you believe it? That's nuts. Anyway, that's where we're at. Good old winter. Just when you think it's gone, reminds you just one more time, I'll be back to annoy you for 6 more months. In a few months. Well, in 6 months. Well, not really 6 months. It's a little longer, probably 7 months of annoying cold. So good morning, everybody. And Fernando, good morning. You're the first through the door this morning, Fernando. Where are we at today, he says. Where are we at today? You had some good sleep? Did you finally go to sleep last night, Fernando? You're up practicing and practicing. I do admire that. Looking at your charts. Dropping diagrams. I love it. I tell you, that's how Dave was getting it. He was starting to see it clearly. He'd be dropping diagrams, checking, rechecking. Great. All right, so let's look at this stuff. We got 27 minutes here. Just you and me. Oh, we got 9 people now, Fernando. Oh, there we go. Jonas, good morning. Invest. How's it going? Saint 33. And Sammy, good morning. All right. We'll come back to the NQ. ES. What do we see in ES? Let's put the daily up here. So return to equal lows back into this breaker here. If we cleared this one out, then I think we're looking for this one here. The mean threshold of this fair value gap is pretty close to lining up with the bottom of this swing here. Equal lows here. Nothing solid here this morning. If we do get a retracement, I wouldn't want to see this whole thing fill in. I just want to see it come back to these equal lows, the bodies here, just above this monthly fair value gap we got going on here. Come to the top of that, then roll over and start coming back down inside this. Would be nice. On a 4 hour. What does the daily tell us? We've already hit the mean threshold of this again, or the consequent encroachment of that BISI on the upside. We have not fully closed. Oh, yeah, I guess we have fully closed it in all the way to the bottom. So now we're just inside this BISI here on the daily. Do we come back and refill? Or right near the middle, so this is where the indecision comes in, right? You have to wait for something to set yourself up. There's nothing here on the daily other than we're inside this fair value gap right here now. We've worked a little bit of the top side. 51.30. Yeah, like 51.25 and 51.30. as upside, and start looking for the reversal to happen. Look for that reversal pattern, which is what this was here. Came back all the way through it, broke through the mean threshold of this candle right here, and then retraced all the way back up into the consequent encroachment of this. Anywhere inside there for a continuation on the downside is what you're looking for there. This extra day in here is what messed people up too, before it finally hammered down. So yeah, I'm looking for a retracement back into this candle here on the daily. Let me put that back to there. So looking for these equal lows today. We're inside that imbalance, so I do look. We want to stay. Nope, this could go back up again. These are literally overlapping each other here now. This one's slightly lower than that. So we're stuck between these two. Either go above, come back, find support to go higher, or go through, go down, come back up, find support to go lower. So right now, bullish on the 1 minute. What are we bullish to? 38,439 is the furthest upside, or 38,445, 38,450. Anywhere in that range, I'd like to see it hold in here. 50% of that wick, at least a return back to this order block here on the daily. I know you can't see that because I'm look for a return back to this order block body here. Oh, the wick, I should say. 38,462. If you lose more than 50% of this on the close today, we might get a retracement back into this daily fair value gap again, which is not really where I'm looking for. So a little more upside today for Dow. And that can change, as you know, rather quickly. Dixie, let's look at Dixie here. We're still looking for Dixie to make those this high here, that gap. I still think we're heading for that gap. We're inside this fair value gap here, and that gap is left open. So that's a big breaker way up there. So more upside for that, which puts more downward pressure on GBP. If we do get a retracement today back into the edge of that fair value gap at 12490, and then look for a further continuation on the downside. Let's look for, open this up a little bit here. Yeah, because we're gonna start digging into this fair value gap down below us here. Yeah, I'd like to see it just come up, run up just above here. Hit this order block, or at least just come back to these equal lows here. Just clean out yesterday's high, then come back into the range that it's going to create today and start heading a little further south. And then you get the low of today and tomorrow into here. and then reversal, maybe with Thursday's reversal. See how Euro's already started digging into that? Its fair value gap below it. So we're looking for a return. Yeah, we've already hit this yesterday. 50%. Yeah, I'd like to see this continue back down now, getting into this fair value gap below us. And again, look for your setups to confirm which direction you want to go. What your overall bias is. It's kind of hard when you're in the middle of these two and you're almost sitting at 50%. So we could continue pushing all the way through into this order block, this old low here. This could just keep running right back up into here before finally coming back down again. So, which means this could push higher into this order block, these equal lows, the bodies of the candles here. It's hard to say when you're in the middle of all that between these two inversion fair value gaps here. Gotta wait a little longer, I think. You're inside this inversion here now. Looking to get on the upside of that. If you get on the upside of it and continue higher, look for the rejection block, old high. For Canadian dollar, it's great, just as we're going to New York. Canadian dollar's losing value like crazy. Wow. New Zealand dollar still heading for that fair value gap we mentioned a few days ago. Looking for, if we take this out, look for the lowest down close candle here, right at the mean threshold, the consequent encroachment of that inversion. So it's a reclaimed fair value gap, not inversion yet. So we have to work the bottom half of that back into consolidation. Old cam model there. It was a beautiful cam model. See that? Come all the way back down, hit it, and then you had this massive release. Beautiful cam model there. Wow. So anyway, we're looking for what's over here. I'm looking for $58.67. See what kind of reaction you get of $58.67 to $58.59. Thought I'd mention that. So it's on record. We have yet to fill this at 63.96 or 63.90 for downside, and then the fill obviously of the fair value gap there. And then we could just reach all the way through to, I don't know, somewhere around here, 63, take out these lows. But let's not overshoot the PD arrays. We're just saying more downside now into the fair value gap. You have one inversion, two inversions. So they're overlapping each other. So I'm looking for a return into the second one. Well, we broke that swing projection high. Clearly their discussion with the Americans the other day has not helped the Japanese yen at all. When you got more upside, you just keep going more to the upside. Just keep finding support until you find something that breaks on a lower time frame, like an hourly, starts breaking to the downside. You're still going up for Japanese yen. Crude oil. Still got nothing for crude oil. See how we just constantly keep running down to this daily fair value gap? We're tapping it, We try to run through it, pull back. Now it's just tapping on top of it again. So you got to go to a lower time frame and see if there's anything of consequence for you there. Four hour. Back into the breaker. And then we're rejecting off. So we're between this candle here and this candle here. If we lose the mean threshold of this, you can get a retracement back up into that range and then finally drive through. I think Derek made a good point yesterday when he was mentioning about just because the mean threshold gets taken doesn't mean it's going to drive all the way through. You can get a retracement quite high back into the range, into a premium range before finally taking that. Kind of just tips its hat and says, I'm heading this way. I'm going to give you an opportunity to get in before it slams down. So look for 4 hours, at least look back. You know, we're stuck between these two candles. So right now we've already hit the mean threshold of this candle. So you're looking for a return back up into 85.66 to a full fill of that fair value gap at 85.85. Gold still coming into retrace, still going higher, despite the American dollar still going higher. I think that the reason is obviously because of this instability in the Middle East. We have the Palestine, now Iranian conflict, trying to trigger a war there. This gold will continue to push higher. It'll be out of sync with the American dollar. Silver, same thing. Still have support off this order block. Continue higher. Look for a close above 50% of this wick and continue higher. Copper, higher. Palladium, main threshold, that'd be it. You want to see it close below that. You're really between these two candles right now. You got a CAM 2 model entry right there. Stop loss goes here for higher prices. The banks. Looking for CIBC, for our Canadian CIBC to get into these levels. Take out the lows. Laurentian Bank just took out its lows. I'm looking for them to return back into this area here. The fill of this fair value gap, 25.45, and then run for these equal lows down here. That's what I'm looking for LB. And then get ready for a nice little explosion, because if the banks recover, it's going to be crazy. Look for this Bank of Nova Scotia. Got a pocket of liquidity down here. You got to get through the mean threshold of this candle and head for that liquidity there. These are all ETFs. I'm just waiting for them to come down and snap them up. These are all like double-digit ETFs. They all pay more than 10% in dividends. So you get almost a 1% return. Some of them you get 1 or 2% return every month, and it pays monthly dividends. They're good. Bitcoin, look at Bitcoin. And it's had some really nice reversals. Like I tell you, if you miss the reversal here, the body trades below it, you need to see this. I don't know where that was. I was just looking at way over here. So anytime you get these little reversals here, you don't get in there. Wait for it. Watch this guy here. Drop down below it. Oh, guess you don't get a chance to get in on that one. You don't get a chance to get in on that. Sometimes you're not going to catch them. Look for this breaker right here. You run up above it. Right there. Nope, you don't even get a chance to get in on it there. Here. You break down. There's your up close candle or down close candle. Return to it here. Short. I don't know if that's a close just above that. Tap inside to run back up inside the fair value gap. Remember, pull your fib tool. As soon as you get to 50%, go straight break even. Here's a reversal. Up, come in here. You don't get a chance to get on. See, I love these ones that are just like, they're rockets. They said, like, we're getting the hell out of here. You go through 1, 2, you don't quite make it through on that one candle. So you go to the one that actually clears all of them last, which is this guy here. You return back into it nicely here for continuation to the upside. Look at that big run all the way up. Reversal. See how the body breaks below it? You don't quite come back into it, but you do eventually get into it here. To continue down, taking out the lows as you go. Reversal. Doesn't give you a chance to get on. There's no breaker for you to get a hold of there, so you wait. So you have a body finally break right here, comes back into it here, run for the high, reversal, body breaks below it right there, retrace back into it here. You're back to an old order block, old highs, mean threshold, or consequent encroachment, whatever you want to call it. Return all the way back up, does not take your stop loss out. And then continue down. You took out a little high here. Reversal, come back inside. You don't quite catch that fair value gap there, but you do catch this last lowest down close candle right here. Up inside, or run back down. So you're not going to see them, you're not going to get them 100% of the time, but if you can't catch the reversal, you look for the breaker. And if you can catch the breaker, then you can continue working it to the upside or the downside, depending on which side you want to look for. Anyway, that's Bitcoin. Constantly delivers some really nice sugar, still continuing down. Soybeans, oh, it's really choppy, hey? Looking for a run into 1145.2. Still consolidating, dropping. Coffee still running up. We finally hit that little pocket we were looking for the other day. We popped through it. Now you want to start seeing this climb up on top of LIQUIDITY, get up on top of it to continue higher. We're in a consolidation now, so it's kind of hard to say where you're going to go. Oh no, there's still a little piece down there. Still got a little piece down here. I like that snappy return off of that. So if this becomes your swing point, you want to see it get a body above here at 181.30, and then with a nice body to return back to it in here to continue higher. That's the only time I get bullish on that. Coco's just returning back to its order block here. little breaker. I'm going to find some support on here and continue pushing higher. If it doesn't, obviously you're looking for these equal lows and a return back to this fair value gap here. Lumber still continuing down. Looking for 523 in lumber today or the next few days. Lean hogs. Still looking for it to return back in, give it a tap of this fair value gap. If it does, leave it open and continue pushing higher. It's a positive sign for heavier upside. And the rest of it, we don't worry about. So I'm kind of looking for 10 o'clock to run back up into this, the bottom of this fair value gap here. Now that we've broke it with a body, I'd like to see it come back, find a level of support here. And then I'm looking for a reversal to happen. So I'll look for a reversal around here at 10 o'clock. We'll see how this candle acts here. And then the mean threshold or consequent encroachment. Also these old lows and bodies. So I'll look for a reversal here or in this cluster right here. If we end up driving right through it, there's a little imbalance right above you here and this breaker above you here. I wouldn't expect to see that breaker get taken out. Not just yet. I expect to see some more downside prices here yet. But if we do, if we lose the breaker here, the mean threshold to the upside, I won't get bullish until we get above these old highs here. So it has to get above, it's Monday, Friday, Thursday, Friday's high. Yeah, it has to get above that for me to get more bullish. So right now I'm bearish. Inside this fair value gap here, I'm looking for some sort of reaction out of here. So I'm kind of looking for any type of reversal to occur in here. And with that, 1 minute left. We'll say good morning. Tommy, good morning, my friend. How are you? Josel, hello, hello. Joselle from the Philippines. Josel from the Philippines. I worked with a lot of Filipinos in Manitoba when I was teaching for St. John Ambulance. Awesome people, awesome people. Hard-working, holy smokes. Hard-working people. Simo's doing a lot of that studying too. I like that. He's actively participating in the New York Open. Oh, this is the News Open. News release. See what kind of reaction we get in here. Now, wouldn't that be crazy if this ends up being staying open? We drive down and that creates a fair value gap here today. We don't even come back into this. And then the next day we come back up, revisit it to continue pushing lower. This being one of those reversal and through this breaker. I'd love to see this thing get taken out on the downside, come back inside it, just tap above it right back into this level right here. That would be a full, here's another idea, downward candle, freeze it up, tomorrow reverse back into this wick, touch that, and then Thursday drive it down. Anyway, those are some ideas. Mohammed, good morning. Victor, good morning, Victor. Bia, good morning. And Paul and Tristan, good morning, folks. What time is it down in the Philippines, Giselle? can ask my trusty. What time is it in the Philippines right now? Ooh, 9:30 p.m. Joselle, you're right in. That's tough when you start catching the New York session at 9:30 at night. It's not too bad. But, you know, to try and stay in there to the afternoon session, you're up till after midnight, which is really tough. I tell you, the best place in the world to be to catch all the heaviest markets is Greece. You get up, take it easy, you have your coffee, you sit by the beach, you get your laptop out, sun's up, go for a walk along the beach around 8 or 9 o'clock. You go for London Open, you work all the way through London Open, and in the evening, you catch the New York after dinner. So you go out and enjoy your day. And then in the evening, you get to go out and or come back, have dinner, trade the New York Open, New York afternoon before bedtime, rinse and repeat. It's perfect timing, man. Great place to be. So let's see what happens with this return. I'd love to see that just sit right off of that and then react. And that's where we're going to be looking for a setup for today. Right now, this is just an observation sport. How do you like to study your price action? Are you watching each one of these candles? Or are you just waiting and losing an opportunity? Every time a new candle forms, are you losing an opportunity to study something? Like really study price action. This is the stuff to be in, and watch each one. Where does each wick end up? Watch how the candle's bouncing. If you're into really studying, watch when it taps a spot and how quickly it reacts off of it. And then trace back, say, what range am I in right now? What areas provide a level of support right now? So what 2 candles am I in right now? And if it blows right through that candle, say, was I in the right candle, or did I miss the range? And you practice these small little ranges, and as the ranges get bigger and bigger, you'll get better and better at predicting where they're going to go. Tok ham. I like that. Tok ham. 10:30 p.m. in South Korea. 10:30. Man, South Korea, you guys are up late. That's way past my bedtime. No, 10:30 is a great time. Catch some Bitcoin action. But welcome, South Korea. Thank you for popping in. Tok. I like that. Tok. Ham. Ooh. Yeah, so we woke up to just a pile of snow out there. My wife's like, oh, I gotta go out and shovel. I'm like, you're not gonna shovel? We're in April now. Mother Nature can shovel. She can just heat up the ground and melt that stuff. We are not shoveling anymore. We are done for this winter. You came here to learn ICT. Well, I think ICT is the best place to learn ICT. Tok. If you have studied his material, or if you haven't studied the material, don't pay for it from somebody else. That's number one. Go to the horse himself. Get it right from the horse's mouth. That's an expression we use over in this side of the world. It's for free. Everything we paid for back in the mentorship days is now free and available to everybody. Start with his core mentorship stuff, the core content, and then work your way up to the 2022 model. If you want, I'm a firm believer in start with season 1, episode 1, and work your way through. Make a ton of notes and keep going over it till you get it solid in your head. Then you come here and we'll show you how to apply it, how to read it. Because right now, if you're just coming in here with no ICT knowledge, you're going to hear terms that's going to throw you off. Unless you're one of those people that has got a great brain and can pick this stuff up super fast, then stick around, my friend, because we got some fun stuff to show you. But definitely don't go pay for it from somebody else. You come here, you get this for free. Everything's free here. It's true. In life, sometimes things are for free. There are people who genuinely want you to succeed out there. I want you to succeed. I want to hear your stories. I've heard some amazing stories from people about how they got into this, why they got into this, what motivates them. And it's heartfelt. It really is touching to hear some people's stories and why they're into this. So I think it's awesome. I want you to succeed. I really do. And all those people that are out there selling that stuff, why are they selling it? Yeah, I understand if you got a skill set that you've worked on and somebody else is too lazy to figure it out for themselves, then you want to make that person pay. Okay. I figured there's so much of it out there for free now. And there's so many people trying to fill the void now that ICT is not helping people live anymore, that we need people like Tanya Trades and Hydra, people like that are they're showing you how to trade live and reading the charts. And here you'll just see a lot of tape reading. 1 minute, you'll watch the candles on a 1 minute chart here. This is where I just spend all my time. I just show you how to read candle by candle. And the better you get at reading every candle, whatever model you use will hopefully improve in its accuracy, in its management, and take away some of that fear you get for when you put a trade on, you go, oh, I don't know if you've ever put a trade on, you go, oh, that's going against me right off the bat. I can see it. That's your instincts telling you that you're seeing something that you don't have a plan that you're working. Once you feel more confident about where that each candle is going, you can put your trade on and you say, if it fails there, I'm in the wrong side. Then it's the courage to get back in and trust that you're going to go in the right direction. But the only way you're going to do that is if you practice, practice, practice. And this is not going to come by sitting there staring at your phone or picking your fingernails while you're waiting for your setup to happen. Study, study, study every minute. That's my belief anyway. It's like paramedic stuff. I'm not just gonna, I got this drug in my hand and I'm waiting to give it for the first time I see a diabetic come by. Oh, there's a perfect scenario. I'm gonna stab that. I want to study everything. I want to study as much as I can. And then whatever scenario comes up, then I put that one down and I pick up a different syringe for a different technique. Unless that's your model, which is I don't care about all the other models. All I'm here is to wait for my one setup. Once a day, if it happens at 10 o'clock or 10:10, I'm in. If it's a silver bullet setup, that's all you want to do, then that's perfect. That's perfect. I envy people like that. And they say, is this my setup? Nope. I'm out of here. And then they leave. And then they come back tomorrow and they go, is this my setup? Yep. I'll take this one. Bink. Put my stop loss here and I'm out of here. That's where my take profit's going to be. And I'm going to go away for the day. That's my setup and I know where I want to go. Wouldn't that be great to have that kind of stress-free trading? But we want to learn 101 different ways to get in when all you need is one that's a bread and butter. Do you think we are going to take the upside liquidity at 17,918 and then dump down? This is where I'm looking. I'm looking for a return to this fair value gap inversion now. Get some sensitivity off of this and then get a reaction and come back down. So I'm looking for there and there, old lows, anywhere inside this box here. So I'm looking for a reversal to happen. So if we just continue to trade all the way back down and through this rejection block, see, the thing that gets me wondering is that we've already hit the rejection block right there this morning, or like in London, you hit that rejection block, you run back up now to New York open, and then drive down and take out London's low and start cleaning this wick on the downside, because I like this area down here. That's what I'm looking for. Whether or not it manifests, I don't know. And like I said before, I reserve the right to change my mind if something new appears. But right now, that's what I'm looking at. And we're still waiting around for the 10 o'clock open. Okay, right now, we're in a small, tight little range here. Equal highs. Great opportunity to drive that up there. Take out these equal highs. Run through that weekly fair value gap again, which is now inversion. Run through that. Pop up either just into the mean threshold of it, take out the high. Yeah, to me, it's got to run all the way back up into this fair value gap here. This one right here. I'd love to see it just tap that. Then you look for a reversal, and then we'll catch that on the run down. I don't want to marry the idea. If you keep repeating it to myself, I expect that to happen, when you got to be quite robust and open enough to change your mind at any point. At any point, you must be ready and prepared to change your mind. You're currently studying him. Which ones are you studying, Talk? Which, out of curiosity, which... We have a demand for the carrot. Okay. Demand for the carrot. Ideally, that's where I'd like to see it come. So there you go, Chris. Yeah, so Talk, which particular set of materials are you learning? Are you learning the core content? Are you the 2022 model? Which one are you in? The heck was that? Thank you for the kind words. Patience and more patience. Yeah, that's like the sniper, right? You just sit there in the trees and you wait for your perfect, you may be waiting days for your shot. And the way I look at it is, you're a sniper and you're sitting in the trees and you're waiting for that perfect day where somebody comes along and puts a beer can on top of a fence and walks away, and you go, now's my shot. And you take that beer can out. That's what you're waiting for. That's what snipers wait for. The beer can on the fence. Like when you're studying my ICT stuff, are you actually studying his core content, or are you just coming to these live channels and hoping to learn it here? Probably not the best place to learn it in here. It's a good place to apply it, what you've learned. You could talk to the other folks in here. They'll let you know whether or not that's true for them. this may actually turn into that thing we were talking about with a big bold candle down, and tomorrow come back up in there and tap that for continuation on the downside. Let's wait and see. We still got another few more minutes. We could get a run down into a CAM Model 1 entry. Old high, fair value gap. Return into this box right here. Keep your eyes on that area right there. So we're inside this one. Old high. I want to see a big bold candle get down here now. So now you're going to kind of picture, what do I want to see form in order to go back up? I want to see a bold candle get all the way down here, create a little fair value gap, take out a low for 10 o'clock, come back up and start running up. Mind you, I wanted to see this before 10 o'clock hit here and then roll over and come back down. Reprice, rebalance. This area becomes an area of interest now. Remember, this is just observation now. So we've got a valid order block here. Go between these two candles. Now you're in this range. These two candles, this is your equilibrium point here. Now I want to see that close right there. Just above here, good. Now look at this reprice rebalance I was talking about. Got another fair value gap right here. As soon as you see these, draw them out. Might give you a little bit more a visual reference to look for. So they just came back down into this area here. It's rejection block. Push high for the 10 o'clock reversal now. Take these highs out. And if you're saying to yourself, why am I not in on this? You're not. You're trying to chase money. Wait for your setup to happen. Wait for something crisp and clean. If you chase price and it reverses on you and comes all the way back down again, you're going to beat yourself up. Mean threshold of that candle here. Highest up close candle in the range that you're in now. Right there. So now you want to come back to a discount. So you're looking for here. Ideally, you'd like to get back into this guy here, which is a discount range inside this block. Oops, I should have left this candle little carrot down there. He thinks it's leaving. Let me put it here so he doesn't get too so. It's like just come back down here, fill that spot first. You guys are gonna think this carrot's got some magical powers. I can't even get the carrot out of there now. I have to lock this in here. Lock it, and then I can get the carrot out of there maybe. Nope. There we go. Now we can put it up here. Oh, it didn't quite give us that little return into here. But anyway, you get the idea. We want to look down, come back in here. Ideally, I'd like to get back down to that guy there and there. Let's leave this down here. You get the idea of where I want to see it come to. It's like every time we move the carrot, the algo looks hungry this morning, folks. I'm trying to first understand price action. When is liquidity going to be taken? Ah, yes, that's the challenge. I learned about ICT through other YouTubers until I actually got to know that he is a person. LOL. Oh, I see. Then I found his YouTube channel and started studying from him. Yeah, there you go. Talk. That's what you got to do. And just passed my third combined account. I lost this account a few weeks back because of idiocy / discipline. Tightened up my trade rules, and that seemed to help. There you go. There you go, Chris. Takes a big man to admit when he's wrong, and a bigger man to be humble enough to be able to fix it. Looks like Michael's got an upside objective like us too. He just announced the same thing we're looking for. Is this upside liquidity? I want to see us get an opportunity to get on that though. Not that I would take it, but there's an opportunity. If we can get the upside objective taken, I want to see this just dip into that range there. To run for that high. I guess we're waiting for 10 o'clock. $658 people. We gained 58 people since I came back from on the weekend, last weekend from the boat trip. So much appreciated, much gratitude for all those folks to stick around to engage the markets with us. So thank you so much. And 58 of you are here today. I appreciate you spending your time with me. And I speak for Derek as well, I'm sure. He's quite grateful and thankful for all of you who turn up for his show in the afternoon when he does the end of day macro. He has a lot of fun doing that and sharing that with you guys. So thanks for turning up and supporting him as well. He's a smart man, that guy. So here's our upside objective. Ideally, I want to go a little higher. Then we're looking for our little silver bullet entry to go lower. Or, see, this is ideally, this was the one I'm looking for here. We didn't get that to go all the way up. We're so close, so many times we're so close, but didn't quite get it. I can't even see anything over here that would really support that level. Did anybody take this trade? Anybody jump in on the trade here and just kind of Hail Mary play this one? Five minute. Oh yeah, let's look at the 5 minute. Was there something there on the 5 minute you guys could have grabbed? Let's look at 5 minutes here. Oh, look at that. Very nice. Look at that. Return all the way back inside that swing point. Like right to the freaking zipper. 17,822. Nice one, Hans. Nice one. Hans is on a tear. What a great reversal on a 5 minute chart. Well done. So there you go. You get to see it on a 5 minute chart, and I never saw it on a 1 minute chart. Stand by. Stand by. Was there one? Did I miss it? It was just a return into this fair value gap here, but not the reversal that I was expecting here. Ah, so you really can see that on higher time frames and not on a lower time frame. Look at that. It manifested itself perfectly inside a 5 minute chart, but did not in a 1 minute chart. There you go. Live and learn, hey? Beautiful setup. Look at that. Return finally all the way down to it and then jam it right back up. Way to go, Hans. Good for you, buddy. Well done. Well deserved take on that. And that's the perfect entry right there too. You enter in there, and if a body closes below it, comes back up to it, you're probably going to take the lower side out, and you literally got zero drawdown. You could be chasing that sucker all the way up right now. Beautiful. Well done, Hans. Right into the mean threshold of that candle. Reacting off of it. See, that's got to tell you something about how breakers can be super strong candles, how they can, the mean thresholds just like can be super strong. There's such senior arrays, I tell you. So wait and see what happens here. I expect to see this stay open if we're looking for higher prices. Not that one. I guess it would have to be this one. If we're looking at this smaller range, you'd be reaching down for here. I don't want to see it close below this candle here. Ideally, you want to see that one close back up above here. You get a wick down, come back up and close inside this. But we can come into this discount array. That I got caught on this yesterday. I'm not going to get caught on it today. So ignore the first one. Take the second one in the discount array. And if it drives all the way down into that discount and finally grabs this one, much like we saw over here on the 5 minute chart, see how you had that huge return back down to, like, the spot was never taken, never returned to, and we had to go all the way up, come all the way down to catch it before running back up above here. That's a similar type of things like you might see here. So we've returned back into that order block. we did close below that level there. Now you want to see if this rolls over and comes back down into a deeper discount. So you go from one array to the next array. Or this one here, that would be a discount as well. So draw your premium and discount arrays out so you get an idea what they look like. So here's where your opinion of bullish or bearish can go. We've traded below that low. So if you trade above this high again, come back to it, then you're going bullish. If you stay below this, come back into it, you're going bearish. So mean threshold of this candle, watch for sensitivity off of that. And if we lose the mean threshold, you look for the next price leg up, which would be interesting. That'd be 25 there. I'm just having a look at some stuff here. 50, 75. Yeah, we closed above it again now. So bearish, bullish, bearish. It's a linchpin for which direction it wants to go. So mean threshold's holding price. Discount array. Where's 50%? See how bodies bounce off that 50%, come back up into the premium of the premium array. Okay, and then start to drive down into the discount array inside that range. 62% retracement. Then you look at the small range here, you think that order block above me here. If this is all you needed, then 62%. That whole range is all you needed to go higher. That puts us here. Watch to see if this mean threshold gives way here. So we trade below it, all the way back through it again. Which way are we going? Yes, we still want to go higher, but when do you want to get in? Do you want to get a discount before you go higher? Were you chasing price, thought that was going to go up there? Now all of a sudden you're getting squeezed. You thought that was just going to run straight up to the carrot. And when you look at that breaker, you think it's a senior rate. You were expecting it to just blow through right through these arrays, no problem. Order block, mean threshold, order block, mean threshold. Now that becomes a breaker because we've swept this low here. So you expect to see that hold price. If it doesn't, then you go, great. Now we're starting to push for some upside stuff here. But we might be looking for a deeper discount into this order block here, or in the higher range, get back to where we originally wanted to get on here before going higher. Mike doesn't like the chop. And she is choppy. I'll give you that. That's why it's a observation sport, folks. This is not clean price action. But we're just trying to stay on price and not let it flip us off here. Stay on the horse. How long can you stay on the horse for before you realize that you're not in sync with the markets? Old highs. There's the order block. Push through to discount. I'll put this, that's our overall objective. I will turn this sideways so you get to see when the carrot's sideways, that means you wait. See how you just run back into this order block here, back to this breaker. From here to here, you're inside the breaker. Nice snappy return off of that. Now, ideally, I'd love to see this just kind of blow right through this candle and keep going higher. Then we look at this. I know I'm pretty nuts about price legs and stuff. I don't put a ton of weight on them, but it does give me kind of an idea of where it is I'm aiming for. Look at that. Now you could have reverse engineered that and said, if that's the high, I put this right here on the top and then say, where do I expect price to draw down to? That's a way of reverse engineering it. So just keep this in mind now. I want to see that give way. See how we ate through it. This now becomes an important order block. If we break this high here, this becomes a senior array. We want to eat through this, eat through this. Lovely, lovely. Lovely, lovely. Now we can go back up to, give me some carrot. Give me some beta carotene, my friends. See how you've eaten right through that now? Get through this one. That's our objective. Price leg up. Is there a channel so that I can like and subscribe to his channel? Or, oh no, he doesn't have a channel. He just pops on to Skype in the afternoons and does his macro. He's just on Skype. And he'll put the link on the Telegram channel. For anybody who's in the Telegram, you get the bonus of chatting with Derek when he does his afternoon, when he feels like doing his afternoon closing day macro, which is good because that's where he's got a lot of focus he's putting on that right now. And I still don't have, I've spent 4 hours in here in the morning. It kind of burns me out a lot. So by the time I get to the afternoon, I don't have the mental focus to stay in that long. So Derek takes over and he's got the skill set to kind of take you guys from the afternoon macro. So you can catch him in the Telegram there, Tommy. Cupertino. Yes, took it below the true day opening and true session open, then take profit to liquidity above. Yes, good for you. April 16th, new day opening gap was hit. Could you explain a breakaway gap and a rejection block. What a rejection block are. Watched a lot of ICT videos and explanations he gave. Couldn't understand. Have you used that ICT index, Talk? The ICT, it's an AI that just focuses on Michael stuff. And all it does is just constantly. So if you type in breakaway gap, it'll give you all references to a breakaway gap. It'll take you to the video. It'll move through and have right where he explains it. It puts it in text so you can read it. You can see it. And you can see multiple examples of that. And you get it straight from the horse's mouth. So try the ICT index before you look for my definition. If Michael can't explain his concepts and you need me to explain his concepts clearer, you're in trouble. He's got multiple different videos in there. So whatever reference you originally had, there's probably like 10 other ones you can go to. If you're still not clear after using that, then come back and I'll show you what I think they are. You'll see me say rejection blocks a lot. Anytime you take the highest candle on a swing, the highest body candle, from that point up is the rejection block. That wick right there from the body to the top is called the rejection block. Right there. This swing low right here, this is the rejection block. From the body, the lowest body candle, right there, to the wick, that's the rejection block. So anytime you see these swing points, you look for the highest body candle in that swing, and you say, that's the rejection block. Swing point, rejection block, right there. Swing point, rejection block right there. Here, rejection block. Hopefully that helps. And my idea of a breakaway gap, just so you know, is when you leave an area and you leave it open, and you break a high and you leave it open. That for me is a breakaway gap. If it comes back and retraces back into it, you want to see that breakaway gap stay open to continue higher. Then you've got measuring gaps. And there's a third one. I can't remember the name of the third one. What's the name of the third one, you guys? You got a breakaway gap, measuring gap, and then the third one was, what is it, people? Oh, talk, that is, just type in ictindex.io. Bookmark it, lock it in your favorites. It's the bee's knees. You type in any question for ICT stuff. That's why you don't go to anybody who's live training and just go straight to the horse and ask him, can you please explain to me again what a breaker is, what an order block is, what XYZ is, and it will literally take you right to his words, how he describes it, in multiple different layers and multiple different video entries for an explanation. And all these other people who have an idea what they think it is, I could be completely wrong. And if I am, by all means, let me know, because I will be happy to fix that. That's just my level of understanding of it. So it hit the mean threshold of that weekly fair value gap inversion right there. Not quite tapping that one little line. Give me my line, damn it. I just want the line. A breaker. A breaker is, and this I've had arguments with people over the past, but I've gone to the video on Michael's. Like, a breaker is the lowest body candle, like this, for example. This would be the lowest body candle. It's a down close candle. When you use this candle and you start to go above this old recent swing point, if the candles run above that, this becomes a breaker. Now, I call that a senior array. It becomes a strong candle to bounce off of. Okay, so I expect that to give a level of support. So anytime you look for the nearest swing point, and if this breaks above that swing point, and you got to look back here like this, and if it breaks it, you go right there, becomes a senior array. We have a swing point, a lowest body candle in that swing, breaker. It ran above old highs. And then you can get ones on the low downside. So this is your up close candle, highest one. If this breaks this low right here, that becomes a breaker in my eyes. And then how Michael describes it is this swing point is broken. That's why he calls it a breaker. It breaks the backs of the guys who are at this swing point down here. This guy here breaks the backs of these guys by swinging back up. And you'll see me reach for those all the time. Breakers are super strong, super important, and you expect a level of support at them. And there's 3 different arrays inside each candle that you need to focus on. The high, the open. Oh, sorry, for a downward candle, it would be the high, the open, and the mean threshold. Once you break that to the upside and it comes back down, taps the high, the open, or the mean threshold. The mean threshold is the line in the sand that you always want to see on a candle, providing a level of support. And on an up candle, it's the bottom, so the bottom here, then the open and the mean threshold. And if it becomes a breaker, those are very key levels to look for in terms of support. Like that guy over there. And we cut through candles. Don't let anyone tell you can't cut through candles, because we do it all the time. See that mean threshold right there? Look where it hit. It reacted off of that nicely and came all the way back inside the midpoint of this range to another order block sitting right here. A body did not close below it. Wicks can do a lot of damage. It's the bodies we're most concerned with. So if a wick comes down, taps it in that case, and reacts off of it, those are really nice reactions. And you'll get better and better, talk at how you look at each candle at its level of support. Like that's a breaker, right? So the mean threshold, see how the mean threshold's holding, and you back up to this candle here. So if that's a minor array, this is a senior array, we should lose the mean threshold of this and continue pushing higher, because that's the stronger array in my eyes. That's how the stronger of the two. And then if we end up blowing through this, then you go, oh, okay, maybe this is a high, and now we want to start running back lower. So I look at this as a swing. Here's another thing to look for, is a swing point above an old high. You look for that. Body breaks down below it. You come back up inside it. You can trade short off of that. Stop loss would go here. So Michael was looking for that run above these equal highs. You took that out now. You look for the swing. This is the potential for continuation on the downside, and we may not get that carrot up top. We may not get this return to here. Look how close we are to hitting that. And we may not get it. So there's the swing that's occurring, and it's at 10:15. There's your 10:13. You come all the way down, you hit it. That would be like everybody's looking for a silver bullet to go long. Well, you have a swing point here, so I don't know if I would fully trust this yet to go long. This looks more like a reversal. So what do you do if you can't catch this one here? If you didn't catch that short there, catch the breaker. I'm going to wait here, even though that looks really good. And you'd be paying yourself. Don't forget, if this was your entry right there and you got in as your perfect entry, you got a little bit of a draw down there, stop loss was here, and you're catching this short, you're paying yourself at the rejection blocks for the swing points right here. And this rejection block down here inside this breaker right here. Pay yourself, pay yourself. And if it runs all the way back up there, hop on again and do rinse and repeat. And you're buffering the stop loss here. Anytime there's a swing point, you want to make sure you're paying yourself in that swing. Paying yourself in that swing. Paying yourself in that mean threshold of that breaker. Because if this just reverses and comes all the way back up, you lost an opportunity to pocket some cash. This could be one of those bounce, 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 back and forth. So watch this level right there. You want to see a big bold body get through that, not just little tappy wicks. You just summarize 1.5 hours of ICT. Yeah, but then you get to miss out on all the ICT chatter. After all that, sometimes he goes on these rants and then gives you a nugget of information. They're beautiful, right? See how this becomes, we've dropped below it, trade back up inside it, get a level of support. Now we have a body getting below that, so you could go short right there. I'm just going to go short here, just for the sake of shits and giggles here. That might be the high. Coming off that breaker here. Ideally, I'd like to see this one get taken out to continue on the downside. And you're really not in a discount there, are we? Or a premium to go discount. So let's just wait. I'm gonna wait. Wait for your setup. Come on, validate me here. Come on all the way up. That does look like a nice little run above old highs there. 10 o'clock, that's a classic. Take out the 9 o'clock, 8:30 run. Create a swing point and get short right there. That's beautiful. That's okay, Derek. You get here when you get here, buddy. You get here when you get here. I'll talk saying, I believe we're going lower. That's what I would like to see myself. And if I don't get that, that's okay. We do have a reversal right above this old high here. And the fact that we're not just slamming it down right now makes me go, maybe we do have one more chance to get higher. Because you watch how these candles are acting, right? If this was just running that liquidity there and you don't want these people to get pile on, you start slamming that sucker down. And we've seen that on days where you just see it rip. Like it takes, you want to see these big ripping candles get down there, right? But this is not, see how it's just kind of lingering here? And we're going into 27, 26, 27, reversal. So I expect to see a little turn here for the next 5 minutes. Whether this one holds and we go higher, or we get another one in here to go lower. This is one of those for the next 10 minutes. We used to call this Con Sonar Crazy Ivan. This is a Crazy Ivan moment. And that's a reversal. If you ever look at back in the day when you watched that show, at the hunt for Red October, bottom of the hour, the sub turns and looks back over its shoulder to see if anybody's following it before it continues. If it sees you, it's coming back to take you out. If it doesn't see you, it continues on the direction it's going. And it usually happens at the bottom of the hour. And right now we're sitting at the bottom of the hour. 29. 30.32. We're at 28, another couple of minutes. So look at the range we're sitting in right now. Now we're finally dipping into the discount array. We worked the premium array. Oops. So we worked the discount of the premium. And now we're into the discount, the premium of the discount. Premium, discount, premium, premium, discount, premium, premium, discount, discount, discount. Order block. So you validate it right here. You come back up inside it here. You start to look for these candles and say that from here, here, and here, providing a level of support, pushing down into a deeper discount. Right back inside this little dude here we looked at earlier. Remove this. Well, because I locked it down. So I don't know why it wasn't. So when you're looking at premium array, you can run into it, get short. What are we aiming for? The discount array. Remember the one we were looking for here and here earlier? We wanted it to trade back into it. When you're looking in these ranges and you're trading from one array to the next array, your premium to your discount, there's your example. You run back up into it here, you get short, and you're aiming for here to take this guy. And then you wait to see if this is just another reaction off of here to push back up and then start compressing your zones again. You want to see this give way here on the downside, come back up, find support at it, and eat through this guy here. Been a number of good silver bullets entries here recently, hasn't there? Oh yeah. Michael has advised major caution this morning on sells due to the discount we found ourselves in yesterday, so I'm taking small bites. Take profit at mean thresholds of NQ. Yep. Like if you're inside this range and you traded that, here's where you're taking your profits from like array to like array, right? And you'll hear me say that many times over. Like to like, premium to discount inside this range. We were calling this one a long time ago, never got back to it. You hit it here. Now you want to see this either drive back up into this range here, or you want to see it roll over and start breaking through the bottom half of this to get lower. And if you got in here at your 918 and you just came down to the edge of this one, 918, you are at 60 handles. That's a big day. 60 handle day is and you're inside this messy consolidation crap here, and yet you're still on the horse. Price action hasn't thrown us off. We're still on price action, and you still made 60 handles in there. And if you caught it late, remember we were talking about take the breaker. If you're inside the breaker, even there, look at the mean threshold of the breaker right there. You catch that at 97 to here, 57. There's 40 handles just from there to there. And we talked about that before it was happening. And then when it happened, you have an opportunity to get short there for here. So you have 60 handles, 40 handles. Price still hasn't thrown us off. We're still on price action. We're still going bearish right now. And you saw that beautiful swing happen right above there. And I did not even trade that on my live account. So, and don't beat yourself up. If you're not in this, you don't have to be in a trade every single day. Study price action, because if your emotions are dictating how you feel right here, instead of going, that was beautiful, man, I like that. Take a picture of that, screen capture this whole block and say, there's the time, note the times, and how the 10 o'clock took out that 9 o'clock high or 8:30 high. And then you had that beautiful setup occur in there. What a great screen capture for your setup. You want to see this, take out the high, create that little fair value gap above, pop down below with a beautiful bodied displacement candle, run back up inside. Your optimum entry is right there, because if the body trades above it, comes back to it, chances are you're going to go higher. I married the idea of wanting to go up to my carrot. I kept marrying the idea because I kept getting closer and closer, and then didn't recognize it till we were well into it here. So beautiful screen capture. Put in your journal, document it. If you've got Notion, screen capture that, put it in Notion as a video diary or a digital diary. I don't make any money off of those guys, but it is an interesting journal, digital journal that you can create and type in words, and you can screen capture all this, put all your notes in here, say this, you know, you'd be drawing your fair value gap inside here, and you'd be saying, okay, that's my signal for my reversal displacement. Put a line in here, draw the word displacement candle, a nice good displacement to the downside. That's the reversal direction right there. I've changed my mind. I'm coming back up. I'll give you an opportunity to get in 1, 2, 3 different levels. Stop loss would go here. And the moment it breaks that low right there, you start paying yourself a portion here, or you pull your fib tool on the whole thing. Like this, you pull your fib tool on that whole didgeridoo here, retracement, and then you go, as soon as it hits 50%, I'm going to move to break even. Hits 62%, I'm going to move to 50. Then if it hits 70%, I'll move to 62. You would have been taken out somewhere in here by now. And that's a nice, huge displacement all the way down. And you've caught all of that run down. If you're using your fib tool as your means to get out. If you're using like array to like array, you better understand your PD arrays to do that. You'll just see there's a fun for the whole family in here. You can either use a simple method to manage your back end. You can either manage it with a trailing stop loss. You can manage it with your fail safe, and your fail safe would still be sitting up in here above this thing, because this is your break in structure to the upside. And now I'll be more concerned about this. I'd have my stop loss sitting in here. I want to see this blast right through here to the downside, and you continue going down. Let's put our carrot down in here. That's what you want to see now, getting on the other side of this. And what's this down here? Lowest body down close candle. Talk. What's this? Is it mitigation or is it a breaker? Kiss the carrot. Nibble, nibble. Is that carrot soup, Russell? What's this candle here called? That last blue candle there. Is it a vacuum? Is it a vacuum block? Is it a breaker? Is it a mitigation block? Is it a propulsion candle? What is it, Mr. Talk? Yes, indeed it is, my friend. Indeed it is. It's a breaker. See how kind of reaction you get off of that? Slammo. And you come back up into this small little range you're in right now. Order block right here. See how we're tapping it? See what kind of reaction you get off of that? So now you want to see this breaker, last up close candle, inside a little swing right here. That's a level of support for me. You could start cutting through all these candles and start saying, I want to pick a higher one, like this big beefy sucker right here. But I do like that as a level of support just because I like swing points. So if I eat through this now, it provides a level of, yes, now we're looking for a run back up into this whole range here. If I start eating through that candle, and if it closes above it in one candle, your ass is next, as Michael would put it. So off this breaker, I want to see a body get above this, not just a wick. Now you see how that was a beautiful entry right there, just to catch some major run down. And if you're running for that low and you didn't get it, and it runs all the way back up, it's eating away at all your profits now. So I like to pay yourself on the way down. See how we're getting a nice reaction off of this order block here now, this breaker to breaker. One of those is going to give way now. We either break it to the downside or bust through this guy to retrace back up into a higher. See how we get this compression? It's getting a little smaller. If we start running back up into this premium array way up here, we blow through that and we start running for higher liquidity. So look right here, swing point below a low. Body, if a body gets above here, now I start looking at this little line, all right? There. And I watch what's going on here. This becomes a linchpin for me. Like we saw here. So discount array, run all the way up to a premium array, but we have lots of little swing points along the way up. So I'll kind of keep those in mind as well. So now body's above it. So now you go bullish. And if you drop below it, you'll bearish. So you got to have the ability to be able to change your mind up. Ideally, you want this swing point to get taken out and see one of these here. That would be a lot stronger for me than just taking out these little weak ones. Come on down here. So see where this closes in the next 15 seconds. Mean threshold of that candle. See if it closes. Boom. See how we're lower? Come back, find support at this now to go lower. So you're switching up now, going short. And the mean threshold of that candle, close below. Come back up, tap it, push lower. And if we take this low out, this becomes what? What does that candle become if we take that low out? Well, the drawn liquidity, you look for the higher time frames with the fair value gaps, with the inversion blocks or the inversion gaps. Those are high draws on liquidity. Anytime there's a gap in price, that's the draw, the big draw on liquidity. So look for the higher time frames to give you the bias or the draw on liquidity. And then you look at these levels and say it's starting to take it out. Look for the swing point to say, okay, the liquidity is sitting just above the market here. So do we have a reversal happening at a specific time that we can expect price to run for that liquidity? If you can't get on that, then you say, okay. Well, that's kind of interesting. So we did get the return into this breaker here. So if you missed the opportunity to get in on this one here or this one here, and then it ran back down to the breaker to get long, finally take out that liquidity resting above the market, and then we'll look for this swing point to occur. And then when that swing point occurs, you start to go, all right, now I want to run back into a range here. Where's the liquidity sitting? There's big gaps down in here. There's where the liquidity is resting. We tend to look at liquidity as being these big flat spots. The liquidity is always resting up here. You say, well, there's a balance. So that price has to rebalance. Only buy side delivery, you want to get the sell side delivery to rebalance that price. So when you're looking for liquidity spots, people are trailing stop losses on the way up. So you're looking at these pockets below swing points and pockets inside here or just below. I guess depends on if you're a bunch of ICT people. We're sitting just above here. We want to make sure that we don't just run back up into that fair value gap and take us out. So now we're above again. We're through this order block. We've taken out a little pool of liquidity sitting right here. You'll see all these equal highs. We just ran those guys out. Look for that range to run back into this range here again. So you're going high, you're going low, now you're going high again. Linchpin. Where are we going to go? How are we going to act off of this thing? When do we finally get our breakthrough? Something that should hold price and it doesn't. We break through it on a close, well through it. You come back inside it, get some support, continue pushing higher. So now you're looking for upside. You just took this out here. Think about the range you're in here now. Now that you've taken out some liquidity here, come back to a discount inside this range here. Come back, find some support off of this before pushing higher. Look for that candle wick here. here. You want to see this stay open though. Yes, correct. This is what Derek was mentioning about just nibbling price action, like nibbling your 10 handles out of the market and be content if it runs to 20 or 30 handles. Again, don't beat yourself up and say, maybe I could push it a little bit more, a little bit more. Just take your 10, move to the side. If you see another opportunity, take 10 more, move to the side. You do that 5, 6 times, you got yourself a big, bold day. Order block. See the mean threshold? See how it just taps on it? If it runs through it, that's fine. But I just love the way it just hits it and you get a reaction off of it. It's an area of sensitivity. See that? That's got to tell you something, because in a 1 minute candle, that just ran all the way back down in the second chart, back down to a discount array inside that 1 minute chart, the discount array, and then it's going to run back up, or however it's acting on a 1 minute chart or a 1 second chart. But there's a reaction right off that mean threshold of that candle. It's a level of sensitivity. You watch it and you go, I like to see that. Now, what am I coming back to? Well, I've got this candle here, my propulsion. I want to see this thing propel off this candle and keep pushing higher. Now, I don't want to see it eat all the way through the mean threshold of it. I just want to see it come back to the high or the open. I guess you come back to right in there. See what kind of reaction you get right here. Hmm. Look at the mean threshold here. Look at the range you're in here and you say, is it possible to run back into here? You want to see it stay open, but it isn't a discount from here to here. That's valid now. There's your 50%. If you're looking at it from, they're coming all the way back in and feeding that now. And if you go through the mean threshold of that one, then you come back to this one. So now you're between this candle here and this one here. Just came back to the body. Nice reaction off of that. Are you going to keep pushing through to fill the rest of this fair value gap now? Or was that all you needed come back to the order block, push right through the mean threshold here. Start running up higher now. You're still bullish. You're still above this inversion here. And this is just a reclaimed fair value gap, or a fair value gap that's been hit for the first time. That one and that one is where you're sitting right now. You've already dug into a discount array, into this BISI. Now you want to see some motivation. Get through here with a body and start pushing higher, or run back into here and clean this thing up. But you're overall biased, bullish still, until proven otherwise. Imagine these are day candles. Imagine these are hour candles, 4 hour, whatever you want. If you stay on these candles and you're getting accuracy with these 1 minute candles, and you transpose them to 4 hour, 1 hour, daily, whatever you want, and you're looking for specific levels that provide support, then you're looking for, if this was a daily candle, you're looking for support off of the mean threshold of this BISI here. You look for, on the 1 minute chart, you look for these little reversals that happen, and then you say, great, now I'm getting in on that to go long for the day to take up the previous day's high, that high, what the whole rejection block. For 2 days, you're on this thing for a run back up. Does that make sense? That's why you look at these 1 minute charts and you study them. You get really good at watching each one of these candles as they form. When you transpose it over to this stuff and you start to look at this, you get your bias is cleaner, and then you start to hunt for your opportunity. When you've got your bias on the daily, you start to look for your hunt for your opportunity to get in for these hourly, 1 hour, whatever you want to do. Are you in it for a long-term trade? Then you go down to the hourly chart and look for your hourly chart is the 1 minute chart, and you're looking for that opportunity to get in. And if you really want to get specific, you look for your hour entry. You see, I see an hour swing happening here. Do I get it confirmed on the 1 minute? Take it on the 1 minute. Then you get some super fine detail on your turn. And if you're wrong, let's say I wanted to get in here, right? I see at 10 o'clock, it creates the swing. So play with the swing, get in on it for a run down. And if it starts to come back up, you get in on the swing coming back up, because I still may get my objective hit yet for today. Like this may be just a small little candle here today, and then tomorrow pop up inside here one more time, just run into that fair value gap to tap that old low, and then continue down. Tomorrow may be the big down day, and today may be just a small candle range day. But you still are on the horse. We haven't been thrown off here. We're not going, ugh, I have no idea what direction it's going in right now. We are still staying on the horse. We're still in price action. Well, what do you mean that you want to see it open now? You want to see it open? Did I say open? What did I mean by that? I don't know. Sorry. I don't remember where I was saying that. I wonder how that breakaway gap supports your bias about the market going higher. I guess I'm asking about your thought process. I'm looking at this because we have a reversal that's happening right here. We've traded above it, so I was bullish, then I was bearish, then I'm bullish again all the time, because that's, like, I'm going to talk about that linchpin, that area that says if I give way to the downside, I need to see this hold and continue down. If it doesn't, if it breaks to the upside, then I'm long, right? So then you look for, if I can't get in on this long, then I look for the breaker that I could have got. Like if I miss that opportunity to get in here because it keeps bouncing around inside it, and I go, I'm not playing in there. Well, I'll wait for it to take the breaker out. When it takes the breaker out to the upside, I can get long on that. So you've taken the breaker to the upside, you go long on that, you put your stop loss down here, and then you start paying yourself at this rejection block right here. and then that old high if you get it, and you move your stop loss up into break even now. Because if it comes back and takes you out inside this sloppy mess, you've got to pay yourself a little bit of entry right in here off this breaker. So 66 to 77, there's 11 handles just in 2 minutes right there. Move to the sidelines, nibble your piece out. Now that may not be where you want to trade, and you shouldn't. If your setup is not sniping every little 10 handles you possibly can, then it's not your thing. I just want you to see that price action is offering you opportunities to snap 10 handles out of that. So yes, I want to see this. Right now my bias, I'm still looking for the upside, but I'm not getting it. All I've got is a little bit of support off of this breaker right now. And I've closed way below the midpoint of it. So you got to snap up, take as much preps as you can. And we've got this fair value gap down here yet to be filled. So if I start trading below this again, then you go bearish. And look at this pool of liquidity sitting up here right now. There's a pool right here, and it's in a discount. We want to start getting back into this bigger range here. Where is that sitting? See, right at 50%. Now, if you want to go short, if you want to take this price, if you're an algorithm and you want to take this price lower, and you want to engineer a whole bunch of liquidity at 50% just in the discount range, wouldn't you want to run back up into, clean out the liquidity, go into the premium before driving it back down? And look what's up here. You've got a SIBI that hasn't been, no buy side has been delivered there yet. You've got lots of liquidity sitting right in here now. So we're inside premium of the discount zone. So premium discount of the discount zone inside this range. So if you're in a premium, collecting premiums, wouldn't it be great to come back in here into a discount zone? So if I go in here, you'll see if I move over to quarters, there's the premium of the discount and the discount of the discount. And what's sitting in the discount? This and this. So we're coming back to the 50%, 50%, 50% each zone. Build up some liquidity, drop down in here, then slam up and take out all these guys above you here. Inside this small little range you're in between here and here now, premium discount. And we bashed around inside there. And you can further split that one up into premium and discount if you've got arrays that support it inside there. And you'd have to be down on a 1 second chart to find anything of significance in there. Thanks for your explanation. You're welcome, Christoph. You're welcome, Christoph. It could just tap into the inverse fair value gap and drop down. It could tap in here and drop down, you said? This inversion? It could tap and then suddenly go ripping right through it? Sure it could. But until it does that, I'm still bullish. Now we got your discount. So if Dice is right, we could get this run all the way through. And if it closes below, comes back up, finds support on it, through the mean threshold of that candle, I start going, ooh, we have a change in direction. Not a break in market structure. We have a change in direction. It's a sloppy way to take out a high for this reversal. See this one here? Sloppy, sloppy swing point. So if we drop below here and we have a close, this level becomes important. And see how we're just wicking into it? We're still finding the swing point to go higher. This candle here, what is this one? Tick tock tock, what's this candle called? Breaker? What is it? What's that one right there called? Give me the name for it. %50 of today's range is 17,862.61. That is that's equilibrium, is it? Perfect. I'm thinking that price stays consolidated around 50% until 11:15. After Powell speaks, red folder. I think to stay on the sidelines until then, perhaps. Yes, Burma. I agree. We shouldn't be trading in this anyways. We're just trying to stay on price action. All I'm trying to do is reprice action. I'm not encouraging anybody to take any trades whatsoever. I don't see a breaker. So what's it called? If it's not a breaker, what's it called? It's called a mitigation block. When you have a candle, a swing point that does not take out an old high, it's a mitigation block. It mitigates. So when you come back to it, you can mitigate off of it to go short. And mitigation blocks are not the strongest. They're not as strong as breakers are. So when you trade through them like this, they're weaker candles. They're not stronger ones. So if you thought that was going to go all the way through, Dice, that provides a level of support yet again. We've come back inside, and now we've really pushed through these candles. So this is that buffer thing I was telling you about. If you get an opportunity to come in and buy your first one there to go long, second and third one here to go long, you pay yourself at that rejection block right there. All this, and then you pay yourself at that, and then you look for the higher, get above 50% now and start pushing up into the premium array of the premium zone. Look for a premium array that supports price up there. You've got this order block right here. You've got this swing point here. You've got this SIBI right here. You've got this breaker right here. You got the close, a breaker inside of fair value gap. We can expect to see some sort of reaction off of that. Or are we engineering more liquidity around that 50% mark, come back down into this? See how we took out that swing there? Again, you may say that's not a significant takeout for me. Doesn't matter. By definition, if it trades higher, no different than you, by definition, as soon as that wick gets broken to the upside, it becomes an order block. Until then, it's not valid. Now you want to see that pump right through. I want to see that really get some momentum now. Yeah, when you start getting those higher time frames, if you start to get your bias off of a higher time frame candle, and you know where you want to go for the week, and you're clicking in on a daily, and you're entering on a 1 hour chart, and you capture your Tuesday high or your Wednesday high or low, whatever it is, and that's you catch that, and you get right down to your 1 minute chart, and you're expecting your bias to happen today. On a Tuesday, you're looking at the Sunday reversal candle or Sunday opening candle. See how we still stayed bullish the whole time, even though we had a retracement back into this little range. We came back to a little discount to gather up our orders one more time to go long. And now you're above that 50%. Now here's the 62% retracement back into the range created between the open. Oops. 62%. 11 o'clock. We get the reversal into 62% of the range that was created between the 10 o'clock to 11 o'clock. Look for the range you're in there and the retracement to 62% and around the 11 o'clock mark. And there's your 62 right there. So now we're in the premium array. Now you start looking at this fair value gap here. I think I'll get my validation tomorrow, perhaps. See how we just tap it. We're getting a reaction off of it back into where's the breaker in this bunch. You want to get a nice return to these old highs here. Oh, you tapped it. Come back inside it here. Push higher now. Hi guys. Hey Lori, how you doing? Dow had a better PA for the week so far. Yeah, Dow's been acting quite nicely. It's had some nice little dandy runs here. See if you can't catch this reversal. You wait for the breaker. Trades below the breaker, back up inside it to go short. To the discount array, premium array, discount array. You come back inside it. Look at that, right to precision. Boom, you hit that, and now you return back up into this range, and that's the only order block inside that range. Mean threshold. Wait for your break below. Break below. Now all of a sudden you go, oh, okay, I got a break and I've got a fair value gap here and one here. They're overlapping. Wait for a better setup. You run the highs out. Fair value gap here. Wicks. No bodies taken out after you've taken these lows. You don't get confirmation to the upside. You get continuation on the downside. Breaker again. Run below it. You don't get a chance to get in it. You get a swing here. You have a reprice, rebalance. Body breaks above, comes back inside, right there. Go long. If you're not sure, wait for the breaker. You get the breaker taken out right there. You come back, you tap it right there. It's a long, you're in a premium already, and then you start running for old breaker over here. Swing point, come back down. You can't get it, look for a breaker. Well, that's way down there again. Take on a little high, swing point, you miss it, you can't get it here. You got this one here, you can't get this one, breaker. As soon as it breaks to the downside, breaks below it, come back up inside it, you get short. Breaker, ding, 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 take it all the way out there. So that swing point, don't get hung up if you miss the swing. You can always catch the breaker on the downside. I mean the fair value gap above. Sorry, Dice. Sorry, buddy. I misunderstood you. Sitting at 17,889. Ah, okay, I see what you're saying. This one above here, like the one we're in right now. Yeah. Sorry about that. Yeah. You're absolutely right. You could just run right up to that and then slam right back down again. For sure. Because now you're in a premium inside this range to just roll over and come back down. I do like this one up here one more time though. Now, if you get above here, you get in between these two, you could get this bouncing around in here for a bit before you finally push through. See how we're coming back, find some support at these old highs here. I want to see that really push through this candle here now. That's been validated. You want to see that mean threshold give way, and also that inversion, or that fair value gap here, start to reclaim the other side of it. We've reclaimed the bottom half. Now you want to get the top half. No afternoon trading in Skype group today. Dental appointment and grass cutting on the agenda. Good morning. Yes. It's been a fun morning reading price and staying in the price action. Hopefully you guys find this simply forward, stand by. Hello. You certainly are speaking to lovely. So inside here, price rebalance, come back up inside it, find some support. You want to see it push back down. You're inside this range here now. You want this to hold price, to go higher. If it gives way and we start getting into this lower portion, there's nothing really in here except this little fair value gap below you here. But that's the 62% retracement inside that range. So we could just continue on the downside now for the rest of the day. So like Dice was saying, if that was his upside objective, perfect. Well done. ICT is never doing another mentorship. I think he's done. And the only thing that, if you're not part of his mentorship or a part of his Telegram channel, and that's for all the people who have been loyal to him since the beginning, if you're a charter member, you've been through his mentorship, he has a private Telegram channel that he talks on almost daily and chats with us and gives us his thoughts still. But that's the only place, and you can't get in on that. So He's not doing any more mentorship. So there's a void, right? There's a bunch of people out there trying to fill that void for him. And he hasn't given anybody the wave. I think Tanya trades. He's been advocating for her a couple of times, which is kind of really nice as somebody who supports his material. She's getting, you know, the blessing from him because she does. So I think she follows his stuff really well. So you can check out Tanya Trades. And yeah, there's people like myself that are in here trying to read the 1 minute chart just to show you how to stay on price action based on ICT principles. And hopefully you get a little something that sharpens your pencil a little better when you're looking at your entries. You can understand price action a bit more now. I just want to take away some of the stress that people feel when they trade by showing you up front and personal, right on the 1 minute chart, how you can stay in price action and not be so stressed out about where you think it's going. You say, where is it going right now? And how do I stay in that? Does that support the direction I want to go in? And if it doesn't, then wait till it does. And when it doesn't, you get out and get back in line with it again on the other side. But you need to see, a lot of people need to see this a whole bunch of times. You need to see that reversal supports price and continues to the upside inside a range that supports price. I'm still looking for that upside objective. So right now my upside objective is still viable. We're digging around into this SIBI here. That one's already been whipped through once, but this whole side to side motion here now, we're inside this big candle and that little candle. They're practically overlapping now. Well, they are overlapping. So this is going to get tighter and tighter till it pops out of here. It has to break this candle's low. So the rejection block, or it has to bust up above this rejection block and start cleaning up the rest of the SIBI. So that's where it's sitting right now. So now, do you make a decision? Do you trade this? Hell no. You got overlapping premium and discount arrays. Your one array is in premium and in discount inside a small range. So don't mess with that. Leave it alone. Wait till you get something cleaner. Was his mentorship expensive? I don't think it was expensive. It was expensive because I did live money when I wasn't supposed to. So not only was it paying $150 a month for the mentorship, I was paying thousands of dollars extra for my education in the School of Hard Knocks when Michael kept saying, don't do it, man. Don't trade live. And I was like, I got this, man. Yeah, I got this. It totally makes sense to me. So thousands of dollars I lost over and over and over again. So the mentorship was cheap relative to how much I spent in not listening, to figuring out that I'd had it and I understood it. I didn't understand it. I could have saved myself tens of thousands of dollars had I just listened to him and just been patient. And I understand. That's why I understand people who just want to do it quick, get it fast. You got all the dreams, you got all the things that motivate you. I totally get that. So it wasn't expensive. In the end, it's not expensive. If you're willing to put the time and effort in, it's cheap. Man, you got some multi-million-dollar learnings there. So cheap, and you're getting it for free now. So people take it for granted that it's not worth anything because it's free. You're getting multi-million-dollar learnings for free. And people still would rather go pay somebody who didn't invent it to give you their interpretation of his stuff and pay them for it when you get it from the horse for free. And you get to come here for free and play with it and watch it used minute by minute. How to stay on this horse. See how that candle we're talking about right here? It said it's got to go between here and here. you're overlapping those candles. It literally went bang, hit it, bang, hit it. Said, I got to get out of here. Bang, hit it one more time. Now you either got to start busting down here or you've got to push up higher. So you see it's getting smaller and smaller because you can almost anticipate what each candle is going to do next. So it's got to get out of here. So we're expecting an impulse candle, or otherwise it's just going to, you know, that one's not even valid yet. This one's not valid. So these two candles are out. We're still in that candle there. If you want to go, no, we're still inside this big monster here. I guess you could say that one. Mean threshold, mean threshold. Bodies respecting the mean threshold. Come on, you got to push through this now. Go higher. Or push back here. I look down in here and I go, what is in this range here that you can, it's been balanced. So really you've got upside to go. There's that little pocket down here yet. Don't ignore that. So if you decide to come all the way back down, look for that guy right there. Christoph, you're great. You're great. He was great. Thank you. I like your price rating. It's so clear. Thank you, Christoph. JPS, love the way you explain in detail, pointing it out on the chart so we can see it live. Well, then you're very welcome then. Then I'm doing my job. Oh, look at that. Come on up to daddy. Come give me my blue line. So you see how we've now broken above here. Now you want to see this thing provide a level of support. See, that said I got to get out of here. I've run out of arrays to muck around with. Our little cam model people are just getting all excited right now, going, ooh, look at a cam model sitting right here. Do I get a cam model entry 1? Cam model, bang, right into it right here. Cam model 1, run for a high. You take out your highs. Next cam model, you want to run for the next high. Consolidation, if you look at that as a consolidation, run above, come back inside. Cam model 2 entry right here. And then consolidation with a leg, that would have been a cam model 3. So cam model 1 and 2, come back cam model 1, run above, cam model 1, run above. You cam people are just going, ooh, I love me some cam model entries. Tippy tappy, right off the inversion. See how it taps it? Tell me that's not sensitive. Tell me that's just random shit going on in the market. When you start to see this on a 1-minute chart, randomness goes out the freaking window. Look at that. Right off that, hammered right off of that, and it went right into the next one. And look at what it reacted off of, mean threshold. Tell me there are areas of sensitivity. Bing, bing. Like it's like a pinball machine, man. Why did it stop precisely on the mean threshold of that? Is that randomness? Is that just lucky? All I can say is if you think it is, then you ain't watching close enough. Remember I said when we got between these, we'd be bouncing around? It could hit off of here. It could hit off of here like a pinball. Ding, 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 ding. Till it makes up its mind. Hey, look, there's that array. Remember we talked about down here? This array. This reprice, rebalance. Look at that. Body right on it. And then all the way back up to premium array. Like array to like array. Like array to like array. When we came back down this way, then we said, okay, now we're going to go from like array here to like array there. And look where we went. You saw me talking about that from here. And we said, keep an eye on the upside like array. Then we saw the reaction, say, oh, and then we could get that, like Dice was saying, we could get that reversal happening there, but we still have Price that hasn't been balanced, and we still have more premium, and we still have that little spot that I'm looking for in this little blue line. We ain't over yet. And now we're bouncing around between those two arrays till it makes up its mind. How am I going to get some support off this? Do I come back down inside this to go higher? Now, when you're seeing this thing setting up, now you look for, so start anticipating what's going to happen in price next. Say, what do I want to see happen next? I want to see this high get taken out and this same thing to happen up in here to confirm this. If that's what I'm still aiming for, I want to see that happen up here. Get going, push right through the mean threshold of this candle here. Now I've got to see this broken to the upside, because that's the swing point, right? If this turns around and swings all the way back down into this range again, then you go, we're back into this crappy consolidation again. We want to see a body break above this point right there. Body breaks up, comes back, finds some support. It's like that stepping stone thing. Find some support on it, step up, and continue working your way into that weekly fair value gap inversion one more time. Come back up to the top of it, and then just kind of just run it. Create this kind of setup for a run back down. And again, we may be just banging around in here all day now, but you didn't get thrown off. You did not run for here and say, oh man, yes, Michael said he was right. We took out the high. We're going all the way back down here. Bullshit. It gave you the reversal right there and gave you the confirmation, changed its mind. Then it said, okay, I'm sticking around here. I'm gonna head up now. And it kept you on the horse. It started spinning around here trying to throw you off the horse. And then finally broke to the upside. You found that support that you're looking for. And the range, I've explained the range, I've explained the turning point. We did not break market structure. We broke it to the downside, these little swing points. Those are breaks in structure that are supported by a change in direction. And then you say, okay, so breaking market structure to the downside, but here's the downside inside a range. So look at the range and go premium. Where's the discount probability that I'm going to run for? Well, there's the swing to swing, two really strong areas, like senior setups. You could almost look at them as, what's a senior setup? What's a really strong turn? Is a swing reversal and a swing reversal. Let's see how we're banging around inside that still. Ding, 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 ding. That happens when you get inside fair value gaps. You can expect that kind of just banging around inside there before it finally decides where the hell am I going to go. So look at time and price now. See, we're at the bottom of the hour. Bottom of the hour. Look at that, 10:02, 10:01, 11:02. I forgot about my time candles. I should start talking about those again. Key times where you can expect reversals to happen. So this is the crazy Ivan that's going to start happening now. Bottom of the hour. The crazy Ivan. If he sees you, he takes you out. If he doesn't see you, he continues back up. Watch for this to get broken to the downside with a body. So this one becomes the area of interest. So you're looking at from range to range. Is it feasible that it could run down into here and into that little guy right there in a discount inside this range? Sure it is. So if it closes below here and then pops into here and then runs back up again, you see, oh, you said it would close below there, Darren. We're inside this range. This is where I got caught yesterday. So this is why I'm trying to change my I think the more I say it, the more I bring it to your awareness, then it helps me to solidify that that's a logical level that it could come back to inside a breaker. Now you want to see a reaction off this. If it doesn't, you go, okay, so now we have a swing. So remember, we're talking about this could be a potential swing point. We wanted to see it break that to the upside. It did not break to the upside. All it did would come all the way back up, revisit this, like this one did here to here, went all the way back down, revisited it, went all the way back up, revisited it. Now it's coming back all the way back down again. So if it starts to do that, we've got back to the breakers open. See how that snap off of that? I like that. Now close in the next 9 seconds above this point. So we just want to see that wick get down to the breaker, get some support off of it, and start pushing back higher. See how we close below, above it? Start going back higher. So because we haven't broken a swing point, that little swing point you see right here, in terms of now I want to see this little inversion rate, or fair value gap, turn into an inversion right here and continue pushing higher to take this out. It's not a breaker. What is it? Oh, my tummy's rumbling away here. This fasting thing is killing me. I don't know how Rafiq managed to do that for a whole month. That's awesome. So you come back, see how that one there is not supporting price to go higher. It's just bouncing off of that now. So now you're stuck in the middle of this. You've got this one to go higher. You got this little sucker here saying, I might come down a little bit more yet. It just came right back up and filled it. So you think, is this breaker mean threshold going to hold price? It's their line in the sand. Then if you break it to the downside, you come back up. It's one of those ones where if it trades below what you did right there, see it trade below it, came back up, tapped it. Now that would be a short. Not that you're going to get a short here now, because we're in this big choppy mess of none of this is fun to be in. So you kind of just sit and watch price action here. Study it. That little dip there, you may say, is that enough for you to convince you that that is going short or not? So let's wait and see. We want to see this mean threshold here give way to go shorter. And we need that high to break to go higher again. Now this could still go short, even though it's coming all the way back up into that range, back to this order block, roll over and come back down again. Unless it pops above this and then lands in there again, and then we go higher. So this becomes a linchpin, right? This becomes one of those, am I going shorter for a swing? Or am I going higher? This is not a swing really. Just am I going higher to break above here? So, because this fails to go short when we have a body break above here. It's the same as this supports a downward move when we have a body break below it right there. So you came back up into a range. It's okay if it trades above here because we're in this range. That's that. There's one here and there's one above you. Let it go to the second one because that's the premium inside that small range you're in here. Okay, you don't want to just say, oh, okay, it's here. Then it goes up. You go, oh, I'm wrong. Well, no, it just went to the premium one above you. If you're in a discount, wait for the premium to get traded to turn around and come back. So if I pull my fib tool here from high to low, see, there's 50%. So that's above our range here. So we just popped up above that into this one here. Now we've come all the way back down to this one. Look at that. Now you got to bust through here or you're going to come back up into here. So you're still inside this range here now. You ran up into it. Just popped into the premium range, came all the way back down into, and let me do my quarters again so you get to see what these premium and discount ranges are. So that's your premium range and your discount range. Inside that one, you ran up into a premium array. You're dropping all the way through this discount array now. See how you ran back up into the inside of it? discount, premium inside the discount, 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 premium discount. And you look for what arrays are sitting inside these ranges. And you say, okay, I'm staying on this horse. You're not going to throw me off here. You just grabbed a little bit of premium. I'm inside that range. I want to see this mean threshold give way then to continue down. And then I'm going to look at that as another price leg down. Because remember we said we were bearish. The moment we broke that there, we ran back up into a premium to continue going bearish. You see the logic behind that? Why the algorithm went, I'm going to go lower. But first I need to go back to a premium so I can go lower. Right? It's giving you a hint. Guess what? I'm going to give you an opportunity to get in at 50% or 62%. Look for a premium above me. And you find it, and then you start running back down. And that's what you'd pay yourself right there. Inside that small range, if you got in at 50% or above, or inside this range to go for a quick run, there's 103 or 903 down to here. There's 12 handles just in 2 minutes. But that's a level of understanding you have to have about what range you're in, what premium array you're going to go for. And do you want to trade every single time? No. I just want you to kind of look for a logical, still going down, keep trading below this, so that becomes the swing. We're still going short until we break that to the upside. See this little guy right here? Draw them out so that you don't miss them. Draw out all your price imbalances, gaps, all that kind of stuff. Draw them out because you'd be surprised how often they return to them. Right? So I'll be wick, wick, wick. And then I look for swing points and I go, oh man, where am I inside here? Well, it's just one candle. You're inside that range there to there, and that one's not even valid yet. So we're still bearish. Now this one's valid. Now you've got this order. See the swing point here? Mean threshold here. That's where when you're looking for now. You want to see that give way to continue on the downside. And if it does, then you go, ooh, goody. So if it comes back into it, that becomes what? What's this candle right here? Come on, talk. What is it? Quick. People wonder why Michael stresses certain things. He's seen so many of his students do exact same thing and pay the price, all part of learning curve. Oh, it is. And believe me, I got beat up so many times. Look at that mean threshold. Look at that. Sexy or what? Does that not, do you not sit there and go, I love the smell of that candle? Is that a senior array? Hells yes, it is. And it came right to a line in the sand, a strong point of like, I better reject off of here. Because if I don't, my ass is next. Look at that, run all the way back up into a mean threshold of that candle. Watch how it sits here. See that? It gapped up. Lovely. See how it gapped up above it? Look for here. Back inside this guy again. That's how we traded above it. Come back, find support at it. You want to get below it. Every time we get above it and below it, you start to go, okay, now that's inside the range. It's in a discount. That's the premium. Always keep referencing the range that you're in and the little ranges that you're in. Don't always constantly reference the back one. If you're in this big one in the back, but where am I sitting inside that big one? I'm sitting near equilibrium. So, okay, so then you go to a smaller range that you're in. Well, it's one big monster down candle with an up candle that's behind it. So you can't do anything with it. So you got to think, where's it going to go? Well, it's going to run back up to a premium. See how that mean threshold held? God, I love that when a breaker, it never ceases to amaze me how you see these breakers are just super senior arrays. They're strong senior candles. The moment it breaks that high, it becomes a senior array. When you come back to it, expect a level of support. And if it doesn't, that really helps you reinforce by going, great, if it doesn't get support off of that and it blows through it and comes back to it, then I look at that as support on the downside run. If it does give me support and kicks back up, and then we start running back through this on a close, which you did there, and you come back and you find support at it, where am I looking for? I'm looking for a premium array above me. If you want to get a quick run up for another 10 handles, you start running up into imbalance. This candle came down and it hasn't been filled on the opposite side yet. It has there. Happy days. Now you're up inside this premium array, discount array, inside the larger range. So now if this closes above this, now you look for higher prices. So we're back to that. We closed below, ran up, gave yourself some premium, run back down into a discount inside an array. You literally pay yourself from here to here. You get the reversal, close above here, looking for higher prices back up into the middle of this small range. See how you're starting to compress here now again? You got this big monster down candle here, and that's a run above old high becomes a breaker. So we're expecting this to provide some support now to go higher. This one here, did it break an old low? It didn't. So now I want to see this give way to the upside. If I lose the mean threshold of this again, then I'm looking for this to become an inversion again. This to come. It just doesn't make sense that it would want to come back down here again unless it's got intent of going deeper into the other range. And this one looks like it's been worked pretty good. But remember that little one we talked about over here? Don't forget it. I'll put it out here, draw it out for you. Otherwise, everything else has been pretty much balanced in there. We've got this little pocket right here. Keep your eye on that one as well later on. Wiki. Keep coming higher. Discount, small range from here to here. That's valid now. It's the highest up close candle. Imbalance. 1, 2, 3 attempts to get down. Look at these big wicks. And when you see wicks happening like this, you start to go, how many attempts did you try to make to go up, to go up, to go up? And all of a sudden you failed and went all the way back down again. Then you finally got your chance to collect a discount array, or you can finally run back up higher. So probe. Look at your %. Just popped over into imbalance. Bang. Look at that. Snapped right on it and off of it. Now you want to see this mean threshold hold price. If it loses price, then this once again is still holding for a short. I'm still marrying my idea I want to go up here. But even though I'm marrying that idea of I want to go up there, I still have to bend the knee to price action. Price is like saying, no, I'm not giving you my upside just yet. This is still supporting a downside run inside here. Now this is supporting an upside run because we're finding support off of this. So you're between this one going down and this one going up. And this one, you got the support to pay yourself at that breaker. this one here ran up to this candle here and that higher body candle right there. And we're back inside this range again. Mean threshold is still holding price. The bottom of this thing, this inversion here, we're just banging around inside here now. So we're in the roughly near the equilibrium of that. You've got a swing above this high here. So let me start pulling this guy here to here. You want to see that get above these highs here now. See, it just keeps wicking up there and snapping off of it. Investor says, I'm looking for shorts. I'm not looking for shorts yet, man. That's what we're looking for. Break through this now. I want my blue line. I want some blue line. Give me some blue line. See how we just wick through that? So now we're eating into this thing. We're eating into that order block there. And it's a mitigation block, so it's not a strong block. So I want to see it just chew, 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 and then run right through. Chew, 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 run right through. Took my eyes off for a second. It dropped. Ah, breaker. I was never his student, but I also feel beaten up. I couldn't imagine having all of his, all of Michael's stuff out there and people looking at these other methods. I always say, if you can't prove a method on every time frame and in every asset class, everything that has candles, if it can't be proven on all of those things, if you're trying to custom make your little bot to fit one specific time frame or one specific asset class in this time, it's bullshit. It's bullshit. It won't work. You'll end up losing money in the end. That's why if you try to fit one little thing, say, I'm just going to stay on this 5 minute, I've got this perfect setup that happens on 5 minutes, and then you get your ass handed to you. If you run it back, test it through years, you'll find your overall thing is lost because it's not reproducible on every time frame. It's got to be a fractal thing that you can prove on every time frame. If you can't, it is not algorithmic as far as I'm concerned. And I know that's a terrible bias for some of you who have something that works out majority of the time for you. But you must be able to prove this on any asset class. Everything you're seeing on here, you put Bitcoin up there, you put up Tesla or oil stocks or the price of candy from some rock company candy store who's just entered into the market. If your company is driven by the algorithm, this will still happen the same way no matter what you're on. And we're finally getting our run. So it just keeps coming back down into a premium inside this range. Look for that little imbalance. It comes back to balance it into that order block, which is a breaker now. Comes back into the mean threshold, holds price. See how that little inversion right there? We broke above it. We come back, find support at it, bang on it. Again, is that a freaking coincidence that it did that? No way, man. No way. Once you see price, man, you could see, you see precision. Hello. Rejection block. You paying yourself here? Have we talked about when we could have got in on this? I think we did. Yes, many times we talked about getting in on price. And now the thing you have to ask yourself is, no offense, invest, but if you do now, and you said that was going lower, where did it fail for you? Where was the fail point? And was that a logical place for it to fail for you? Because if it does, then you can say, I get back on the horse again. I got thrown off. I said it was going lower. Where does it fail for me? If it fails for you at a specific point and you see it break and then it does fail, you go, great. Celebrate your success. Celebrate the win on that because you're on the horse. You're staying on price action constantly. That's why I keep telling you it needs to stay above this. If it breaks below that, then I'm on the wrong side. You just get back on. And if it breaks to the upside, then I'm on the wrong side. If it comes back to it, then you get back in price action again. So if it broke to the downside, it did. Now you're short. It comes back up, closes above you. Go, now I'm long. Comes back up inside it, still closes above, tap, and away it goes. Linchpin. That linchpin point where you go, here's where it changes direction. When you get in consolidations, you'll see this a lot, especially in a consolidation where you have a premium array and a discount array inside a small range. It'll go below that one to the discount one, run back up it, and just keep bouncing around. You go, it's changing direction. Well, I'm in a consolidation. Do you want to trade the changes or do you want to change the range, high and low, which PD array, blah, blah, blah. There's tons of ways you can trade consolidations. But this is how you stay on it. Look at that. You cannot tell me that that is not some sexy candles right there. This mean threshold of this candle here, you want to see that give way now to the upside. Monsieur Carrot is up here. We are looking for this candle right here. I still want my blue line. And see, even though we've been in this consolidation, crappy kind of price action all day, can you see how, like Derek was saying, you get an opportunity to take 10 handles out? You had plenty of opportunities to catch range to range, range to range. Twice you caught this range above. You caught that all the way back to here. Then you caught that all the way back up to here again, right there. From there to there, there's precision. And you have to weather all that stuff and you get to see whether or not you're still on the horse or not on the horse. It's a magnificent thing, this oh, keep me on up for my carrot. We can all high five if I get my blue line. Looks like the highs will be removed for lunchtime. And they are taken. They are taken. And if we continue to push through my blue line, then my next objective, I look for the reversal. I look for this now. Now that we're above that, I look for this. I look for this. If I get my line, then I look for this. Look for this to go short, and then start looking for your breaker to break to the downside. If you miss it, blah, blah, blah. Rinse and repeat, folks. Rinse and repeat. Looks like highs. You caught the cam model too long at 17,897. Oh, you're talking dirty to me. Russell. I love it, Russell. Good work, buddy. Did you catch the cam 2? Love it. Cam 2 long, 17,897. You caught this long. Got the cam 2 right there. Or 1987, you said? Oh, you caught this guy here? Or you caught this cam model 2 right here? Love it. Then you broke up above. There's another cam model 2 right here. Or, let me just see here for a second. So here's your range consolidation. You break up above it, you come back into cam model 2 inside this breaker because you ran above that high. You give yourself some wiggle room to the mean threshold of that breaker. Stop loss goes down here. You run for the highs. Start paying yourself there and there, there and there. Oh, beautiful. Run above, come back down, find some support at mitigation inside this range, order block. Mean threshold is also this reversal here, or this inversion here, sorry. So you see how this is taking out that high? This is one of those, okay, there's your reversal. Body good. Watch this. This candle's high. Look at this candle's high right here, up here. That candle's high is 92250. This candle's low is 92175. Actually, or sorry, the close. You have to look at the close. 92250. High is 92250. So they literally closed on top of each other. Popped up inside it right here. This one opened below there, popped up inside it, and then ran. This is one of those you'd have to be super quick to catch something like that. But it literally, this candle opened below that candle's high. Look at the open of this candle. The open is 22 big figure. And this one is, the high is 2250. It literally was the spread would have caught you in perfectly with zero drawdown. You would have had the spread and you would be paying yourself at the breaker, paying yourself at rejection block right there. Now you got to say to yourself, if this is the swing, I want to catch this breaker for a run, and it's not giving you an opportunity. But you see right there how quick that happens. Snap, I'm heading out of here. I'm not giving anybody a chance to get on. There's no Joe Biden whisper there. Just got $6 trillion. I'm giving you a chance to get in. There's none of that there. It was just literally bam, bam, away she went. You'd have to have laser Hawkeye to see that stuff. But say maybe some of you guys turtle soup that. As soon as it took that high out, you went turtle soup. I'm not good at turtle soups. And once again, I'm denied my blue line. So now we've got to work my way all the way back up there again. But price told you it was heading south right there. And if you didn't catch it till there and you said, okay, change in direction, not a break in market structure, just a change in direction. Break the breaker. See how we ate all the way through there? On a close, you close that, your ass is next. As Michael would say, mean threshold, close below it, blammo. It took them all out. So where are we back to? Keep your eyes on this open down here. This one has not been tapped yet. So look for that. See what kind of reaction you get off of that. It's not a reversal. Reversals happen like this. Oh yeah, we want to mark that one out. That one out as well. We do cut through candles. Watch those three delicious little areas. Look at that. Snap. And comes off of it. Oh man. I got to go back to my minutes again. I taught the minute stuff a while ago. I'm going to show, I'll gotta make a video of it because that is like bang on. God damn. Are you guys getting excited about, does that not excite you? Come on, guys. Does that not excite you? Look at that. Premium to a discount. Inside this big ass range right here. We just drove all the way down to that little discount array right there. And look at the snap off of that you get. Now you just want to see that just come back down, push through even harder, get down into this lower range and this reversal down here. That's where I'd like to see that come. But if it doesn't, it kicks off there. Look at the small range you're in now and start saying, what premium arrays are above me? Jeepers creepers. Where are they? You've swung below these lows now. If I see this get taken out to the upside, you're looking for reversal to reversal. The same thing we saw from here to here to here to there. That one from there to there we saw. Now I'm looking for the same thing happening from there down to here, because remember you didn't get an opportunity to get in there really quick. So open it up, come right into the bottom of this one here. Then wait for a reversal to see if you can get an opportunity to come back inside this range again with lots of pockets of liquidity just waiting for you to come and collect. Invest what is a turtle soup? Go to the ICTindex.io and type in what is a turtle soup, and Michael will show you with absolute clarity what a turtle soup is. Thank you so much for today. You gained a fellow viewer. Well, thank you, Talk Talk. I guess from now on you will see me here every day. Well, we're happy to see you, Talk Talk. Come on here every day. We're happy to have you. This has got to be the best channel ever. Everything Michael said is making so much sense watching you use it as a demo. Well, I'm glad that's happening for you, Jonas. Excellent, excellent. See you tomorrow. Yep, I have the same opinion as Jonas. What is a turtle soup? Got that 1 hour, 15 minutes before Powell speaks. Interesting that it didn't even go to the mean threshold of the 15-minute fair value gap from Monday 11 or 1:30 p.m. candle. I can't believe how close that is coming to this inversion. Coming back to just give me the inversion already. And it's literally 36. Still just short of, it's like 18 handles short of that inversion. I want that candle. What is that high of that candle? That is 54. Right on the money, right there. Yeah. So what you want to see now is you want to see a nice, these significant lows get taken out. I'd love to see that one come all the way down into here. Clean this out. Then give us a nice little reversal setup for a run back up into here. Interesting to see how the market will move. Lunchtime movement now, liquidity and imbalance hunt. Direction is secondary. Yes, I agree. I totally agree with you, Derek. Don't worry about biases right now. Just liquidity hunt. And you're inside a big consolidation, liquidity hunt. Take your 10 handles, get out. Jump the gun. Wait for the body to close above this, not a wick. And there's your body. Shepherd, appreciate the help. The information. I'm trying to stick on rules and I'm on a loss of 0.25%. Still, I am happy that I'm introducing with the markets. With the markets move, and I'm sure I will get a day. Furba. Man, that's some sexy talk you got going on there now, my friend. That's what I like to hear. That's some good talk, my friend. That's some good talk. That's the way to think, Furba. I'm looking right at you, buddy. Good for you. Good for you. Now I'm going to move this little sucker right into some profit just because I don't want to take any losses. Oh, we can take one off. Let's take one off. How do you take one off here again? How do I protect, close? How can I take a profit? How do I take a piece off? How do I take a piece off? Oh, I can go like this. I don't want to buy two. What a lame way to do this. Comes down. There you go. I get to take one off there. Ooh. Pay the tally man, my friends. Now I'm going to come to here. See how we found support at this? Throw it above, come back down, find support at it, pushing higher now. And you're guaranteed yourself some profits. So if it trades against me, I'm in a premium array now. Another way I could do this is I could pull this fib tool from here to here. And I could go retracement, 62%. I'm now sitting at 50. You should move it to 50 right there. Pay yourself at that portion there. Now if it comes I'm expecting it to come all the way back up into that range from that discount array to a premium array. Because there's all this liquidity just saying, come get me. Come get you some. So we'll do the 62%, whatever. So you could pay yourself at the 62 if you want. It's going to come back and take me out here at 50. And that's a 62% retracement, optimum trade entry to go short. That's why when you chase it up, you keep your, we entered in down here. We still got a portion down there that hasn't been traded to yet, so we can leave that in for later. Actually, I'll take that one out now because I don't want to confuse the whole issue. So if it gets to 70, I'll move this to 62. If it makes it to 75, I'll move to 70, 79, so on and so forth. If it doesn't already take me out, I'll keep waiting. I'll keep pushing that up, but I'm not going to take any losses there below 50% now. And that locks in another 250. There you go, 265. So now if it runs all the way to the top, am I going to beat myself up for that? Hell no. Hell no. Now I can take that same trade again right here. And this guy right here. And I've already paid myself all the way up to there. So if it comes back here, I've buffered any lows that I could possibly take out down here. And I wouldn't want it to see it get below this candle here. So because we're in this discount, and I've got one here, I've got one here, and I've got one here, I'm allowing it to come all the way down to here and not make this as a swing point because it did not take out an old high here. But see how it's come back inside this guy right here? Bodies are respecting it, pushing higher. This is the next price leg up. So this could take out this higher even. Look at this. As a possibility. Take that high out. Who knows? Maybe, maybe not. This is fishing. You put your line in the water, wait for the algorithm to come to you. Don't go chasing it. If it runs up to there and I can say, oh, look, I could have made that $1,700 I had sitting there. I don't care. I don't care. I traded my plan. I planned my trade. I traded my plan and I got out at what I accepted as a logical level of optimum trade entry. Now, if this turns around and comes slamming back down, you'd be like, oh, yeah, I did the right thing. No, I just traded my plan. If it comes back here and grabs me in again to run for that, I'll be super happy with that because that'll be like from discount to premium, back to discount to run finally up into the bigger premium level. Then you'd be like, oh, yeah, that little buffer. I made all that cash going up. It'll come back and I get to do the same trade all over again, still running for this objective. And we have, when does Powell speak? Not too far from Powell speaking, is that it? And we'll put this here because we just go ripping. So we're cutting through candles back over here. Now people are thinking, oh, we're going to run higher. If it turns around and comes all the way back down in here again, you go, we're denied again to go higher. It's just up in a premium range. Order block here now. See how this swing point here? That now becomes a breaker. I want a discount inside here though. Look at that breaker. Hit it. Now go higher. I like that snap off of that. Looks good. We're still inside this one, this breaker and this inversion from way back yonder. We have two senior arrays battling one another. We've already ran through it once, so it's weakened. It's wounded on the battlefield. We've run through it once, slice, find a bit of support at it. Now, is the breaker going to hold to push through? Or do we break through this and start running back into a discount array for this stuff down here? Go FURBA. Yeah. High 17,939. Yep, I agree with you. We're still going higher. Right to the top of that inversion again. Now, if you're looking at these candles, you go, what is that possibly keying off of there? Oh, this order block here, this breaker. Yeah, breaker to breaker. Ooh, it's gonna give way. And you're in a premium level. So I'd expect this one to give way, or if this one to give some support to push higher. We've got that breaker, and we've got this breaker above here. This is would not what I would consider a super strong one, because it didn't, this definitely took out some serious lows. That one, good support. I'd like to see that supply give us a level of support and roll over, and this guy get eaten up and come back into my level so I can go long again. And if I lose this side on this one on the downside and it trades back into it, I get out short, because now it's changed its direction. And then if we break that market structure again to the downside, we're looking for these lows to get taken out now. It's obvious, or these little inversions that we've outlined. How many of you are saying going higher? And how many of you are saying go lower? And if you're saying higher, what's your reason and where does it fail? And if you're saying lower, what's your reason and where does it fail? That's why you constantly keep saying to yourself, because when you got a trade on, you got to know when you think your trade is going to fail at a specific point. Now I need this to fail right here. I need that fair value gap to give way. Oh, sorry, this breaker to give way, the mean threshold. I want this one to be the support one, and I want this to give way, and I want us to roll back over and come back here. So for that to happen, I need that to give way, and I need to get underneath this thing. And I need this one to continue to provide a level of support. And those of you who are going long, what's your reason? Where does it fail for you? Where's your line in the sand? Where's your stop loss going to go? Where's your fail safe going to go? For you who are like, oh, that's my line in the sand. Snap, it hit it. You go, oh, good. It's still holding. It's still holding. If it runs all the way back up and away from you, you go, whew, my line in the sand just held me. This inversion here was the line I needed for it to push up through here. So now we're banging around between these two again, here and here. You're banging around in there. Who's going to give it up? This guy's going to support to go long or short, or is this guy going to support to go finally take the mean threshold of this guy out? Which way do you go? And if you're in a trade from way down here, you got to start saying to yourself, if that fails, I'm taking my stop loss out. So that's my body trades below it, trades back into it, I'm out. I'm going to go to the bathroom. I'll be right back. We're kind of bashing around between those two arrays. You see that? Which one's going higher? Which one's going lower? Ah, my workout warrior buddy. My friend from out east. Fellow Canuck. Welcome, workout warrior. TP. Look at the 5 minute, he says. Let's look at the 5 minute for a second here. Ah, yeah. We have a swing. Look at you today. All over these 5 minute ones. That's support to the upside. Totally agree. Way to go, TP. Absolutely. Well done. Look at that. Look at that range. Regular trading hours gap. Holy crud. That's huge. That is massive. Yes. See that swing here? Below a significant low. Fair value gap. Body trades above it right there. You trade into it right there with precision, and you're collecting mean threshold. You get a big chunk out right there. TP, well spotted, my friend. Well spotted. Indeed it is. A swing, fair value, body trades above it. You come back, find support at it right here on another 5 minute. Rejection block, you're in. And then it finally takes out the highs. Well, very well done. Yes, nice one done. TP, well done. Good catch. $10.15 to $10.45, Cam Model 1. $10.15 to $10.45. Are you looking at the Johnny? Are you looking at 5 minute? Okay, 5 minute. Yeah, if you can pick a cam model out of that, you're better than I am. If you look at if you're looking at a couple of candles as a consolidation and a return to your cam model there, I don't know. I wouldn't call a cam model in any of that, but that's just me. I would need a lower time frame to call that, but sorry. But if you found one in there and it worked for you, kudos to you, man. That's my consolidation there. Cam model 1, consolidation, cam model 2. Take out the highs. We come back into the swing right there. See that? That's the swing low. So now you want to see this get taken out. You just clipped it there. Now I want to see this come from that guy to this guy. Bodies on the candle saying going higher. You think so? You may be right. They may be going higher yet. But see how that mean threshold, we hit it again and we're bouncing off of it. See how the bodies are respecting that inversion? We ran the high out, back to a swing point. You're back in between these two again. Breakers holding. This breaker's hold. See, now when you look at breaker to breaker, you say this breaker's, we traded through the top, the open, and we're bouncing off the mean threshold a bunch of times, and we've wicked through it. And this guy here has only had a wick come up into it. So of the two, who's getting beat up the most? This guy's getting a lot more beats. He's getting a lot more beat downs than this guy. So that's kind of I look at it as a war that goes on between higher senior arrays. This is kind of like the video game, kind of how you play the video game inside your head. If this is a strong breaker and that's a strong breaker, you go, we've already run up into the premium portion of this array. This is more in the equilibrium of that range. So it's getting beat on multiple times. So it's weakening it. This guy here has got some strength. It's got a swing point above him. So to me, he's a stronger one. If this guy holds out after all this beat down here, I'll call him John Wick candle. That'll be the John Wick candle. But it just feels weaker now. It's just getting beat on. That it's just going to give it up and we're going to get back into this discount portion of the range again before going higher. That order block's been validated inside this bigger candle right here. Mean threshold is holding. Look at that right there. Bodies are respecting the mean threshold. Back down to here again. Beating on that freaking mean threshold of that breaker. It's going to say, look, man, I did my job. I tried to hold off as long as I could. And this guy, they took one swipe at him, 2 swipes at the wick, then 1 at the body, and he snapped them back right away, right back into this guy. His wick and body have been beat on multiple times, and then it's given away to the line in the sand with an inversion supporting the breaker. Bang, 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 bang. We're drilling. Just imagine this just like a hammer just beating down on this thing until it finally breaks and gives way. That's how I kind of picture that right now. See that? We're dipping into it again. We're cutting through it. This guy gets the Hail Mary play, delivers the pencil, the John Wick pencil to the neck, and then starts to run and take this guy out. Then good for you, John Wick candle. Do I use any indicators? No, I don't. This is the only indicator I use over here, that custom indicator thing. And that's this, these two here. I use ICT's One Setup for Life. That outlines all of these Asian high, Asian low, London sessions. It outlines the kill zones and also the regular trading hours gap and also the New York opening session. It marks those just so I got something I can look at and say, okay, we're coming to the New York Open. That's the only one I use as an indicator. Really, it's just more of a blocking out specific levels. Believe me, I've wasted thousands of hours. I would say thousands. Well over 1,000 hours at least, building bots that look for specific levels on an MT5. What a waste of time that was. MT5. Don't trust any of those MT4, MT5 platforms. Look at this thing just hammering away on this mean threshold. It's not a strong one by any stretch, but by definition, it does break the swing above. So now we finally hammered, and you see how it popped through? It finally gave up the ghost. So that's how I kind of look at the play. Bang, 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 hammering away, just drilling away. I'm going to get through this, popping away. And if you look at this as a bacteria from an EMS perspective, that's just like a giant bacteria, and all your white blood cells are just beaten down on it till they drill through it and kill the lysosome. The lysosomes all pour in there and kill the bacteria. You should see it on a video. It looks really cool. So now we're getting back into the discount portion of this range. So we want to see this break, come back, find support at it to push through here, and give me another opportunity to get long up into here. Do I think the market's as good as it was yesterday? The markets are good every day, my friend. This is what you want to look for. Sometimes you get these big soup kitchen things where they just hand out food, like yesterday's beautiful little rundown. And today is a beautiful chance to practice price action. You think about how many people have come and gone in here already through this and just said, ugh, this is not doing anything. And they just toss it aside. They don't even look at the charts. And what you guys have been able to see here explained on a 1-minute chart, and we're staying on the horse. If you get thrown off, how you quickly get back on the horse again. That's, to me, is just as valuable as those big monster days. Like, yeah, those big monster days, they're coming. Those salad days, like that one day we just had yesterday, you're going to get days like that so many times. But if you can identify price action down at this level, and you can stay on a horse, I tell you, those salad days are coming for you. You're going to see them. You're going to love it. Absolutely love it. You're going to stay on the horse forever. In big trending environments, you'll be like, I can't believe I'm still in this. I still haven't seen anything that confirms that this is going in the opposite direction. We're still going bullish. We're still going, I've seen nothing to confirm this is going bearish yet. And you just keep loving it. Just keep staying in the chart. So I think these ones, to me, this is just as valuable as yesterday. But you might be looking at value in a different way than I am. Oh, you're welcome, Fernando. Purge and revert. I've heard about this purge and revert. I don't think I've seen that Michael video yet. Purge and revert. Both great videos. I have to watch for that one. Purge and revert. I have to put that in the old ICT index and spend some time watching those. So tomorrow, just so you know, tomorrow we won't be live tomorrow because I'm heading to New York. So I will do a live from New York on Thursday. Wednesday, it's going to take me all that time just to travel there. So I will be in the charts with you guys on Thursday, not Wednesday, Thursday. And I'm looking for, it'll only probably be for an hour or so, just because I want to go, I don't want to spend time, 4 hours of my day while I'm in New York. I want to enjoy it. So I want to go down, kiss the bull on the nose, down at Wall Street, take some pictures there. And then I'll see you guys again on Friday for an hour or so. I'll just catch the New York Open, and I'll do a see if I can catch a silver bullet till 9 or 10, and then if I don't see anything, then we'll see you guys on Thursday or Friday, I should say. And then I'm back next the following week. You see how even though that we've lost the mean threshold of this candle, we still haven't lost the inversion. So this guy's like, I give up, man. It's all up to you. And this guy's like, I'm trying to hold it up, trying to hold it up. Support, support, support. Trying to keep it going. And this guy's still swinging at the fences, trying to keep everybody at bay. Mean threshold. See how now not only do you have this resistance, you got this guy here now. This guy's been eaten up so many times. It's losing his strength. Not much left of him, and this inversion has to hold. If this inversion is still strong, and it's probably in a discount array anyway, inside this huge range. Yeah, it's in a discount. See how it just popped below 50% of it? So it gives it a level of strength in terms of support for the overall PD array to push higher. So if you're looking for a range up, you want to see this give way now to go higher, because this hasn't been broken to the downside. So I'm not going to get my trade here. Never say never. But as soon as we start to trade above this candle's high with a bull candle, then this guy's going to get a couple of knocks, floggings to the noggin, as it were. There you go. Back to this consolidation again. So this one's providing support from here to here, like array to like array inside this range, from there to there, like array to like array, similar to similar, rejection block to rejection block. Thanks, Hans. Yeah, my wife's totally stoked to go. We're going to go see Hamilton. We're going to go see the play. Be on Broadway. I always wanted to be on Broadway when I was in acting at university. And I was going to go to Juilliard. I had lots of dreams when I was younger about going to Juilliard and studying down there. And but as usual, never did, never went. Fear, all that stuff. Stayed in Winnipeg, did some acting there. Then just did little basic roles in support stuff now. Hell on Wheels. I was in Hell on Wheels, just as one of the townies, the guys in the background. What is it? MIB, MBI, something like that, the acting thing. Type in my name in the MBI thing, you'll see sex, lies, and murder. That's the only speaking role I've had in the last few years. I played Jerry Bortov. Some guy's doing time in Florida, I think now. I don't even know what series it's in. That it's actually one of those vignette shows where they do a crime, like a true crime drama thing. And I played the part of this Jerry Bortov who kills his girlfriend's husband for his insurance money. think sometimes people think that all these things I tell you I do, they'd be like, yeah, bullshit. Don't do all that. Look it up, man. You'll find I do art, hypnosis. I got videos out there, lots of crazy stuff. Even in the YouTube, you'll see back when I did martial arts, there's a video of me with my head all shaved. We shaved our heads for cancer for the fire department, generating money for cancer. And you see me with my little bald head doing my kata in karate on YouTube. And that's a lot of years ago already. I want to see this candle get eaten up on the downside now. See how if this is the range we're in right here. See how we're in the premium of the premium range, and we haven't really even come on to the discount range yet. So, sorry, right here. Oops. Let's get rid of that one now. See how we've just come down to the 50%? We're still in that premium range. And this is the premium of the premium, discount of the premium. So you go premium, discount. You're between this candle and this candle. Premium, discount. When I go to here, you'll see quarters. There's the premium, premium, discount, premium. Premium, discount. Inside that range. So mean threshold. See how it snaps off of it? Now if it runs through it, I'm okay with that. So now you're inside this range. So come all the way back to this candle. Right there. Go like array to like array if you want to push all the way down to. So then I look and I go, okay, so are you pushing to the discount, or so are you pushing to the mean threshold? Go mean threshold to mean threshold. If you don't, if you just go here, it tells me I'm a little stronger inside here. So I weight the strength of the move based on, okay, you've just hit the mean threshold of that one. What's the discount array right here? If you run down to the mean threshold of that one, it's balanced push in both directions. If one goes to the mean threshold, the other one comes to the top of the wick like this, I go, ooh, there's a chance it's going to push up a little higher now, because now I've got more strength to go higher. So that's how I kind of look at it. It's not a Michael thing. I just kind of, when you stare at candles enough, you start to go, okay, that's going from there to there. I want to see it come to here. If it doesn't, then I go, oh, it's just tapped the top of that. That one went a bigger dig than this one. This one's surprised. This one's stronger than that one. And that's why we have the run up. And that's why you see that there. So like array to like array. So now you want to go premium discount. Again, we ran up to the mean threshold, rejected off of that. I expect this to come down to the mean threshold. If it doesn't, if it just pops off of that and you go, ooh, and it reacts nicely off that, you go, in the strength of this little run, I expect this to go a little higher, to hit this again, or run up into this rejection block, or run up higher. So that's why you see that. And then up she goes. That's not always 100%, but that's how, when you stare at these candles over and over and over again, you start to look at how that is acting right now as it's bouncing up and down. What's it bouncing up and down off of? Right off that spot right there again, that inversion, it tapped it perfectly. And we know inversions are strong. If I take this guy here and I put it over here, you'll see. See how it tapped it right there? Perfect. Now it's reacting off of it. So now I'm thinking if we get below this candle here, it now becomes, this now becomes a breaker because we broke that high. This all of a sudden now becomes a stronger candle for further upside. So all of you who are still bullish, good for you. I'm with you. Still bullish. I wanted to get in to go bullish. I don't want to get an opportunity. I still want my blue line hit for today. Who's in here today? What's in? Derek saying no silver bullet market on the close action this afternoon. Dental appointment, yard work. Oh yeah, he's got some yard work going on there. So breaker, we're at the last up close candle before a run below a low. Ideally, you'd like to see that low get taken out, but by definition, that swing point there was taken. Breaker, find some support at it, continue pushing higher. Now you're between here and here. You got to give way. So start pushing through here, get on top of that, and start pushing higher. With everything that's coming out about the industry, I'm so glad I didn't get more into it. What industry are you talking about, Warrior? Sorry, I missed that point. JPS. You in Winnipeg? I was in Winnipeg. I'm not in Winnipeg now. My family's back there. I went to University of Winnipeg, did acting at University of Winnipeg. I took commercial art. That's where my art stuff comes from Sturgeon Creek High School. That's where I got my commercial art degree or certificate, whatever you call it. That was the thing back then. AMD will catch you your orders and then distribution up. Rafik, how's it going, my buddy? I'm feeling some of the pain of this fasting, buddy. I know it's nowhere near the kind of intensity or the reason you do yours, but I haven't eaten since last night and I'm hungry. So I really admire what you have to put your body through for your beliefs. I think that's just fantastic. Market looks like it's going nowhere interesting until Powell speaks. Have a good trip to New York. Thank you, sir. Thank you. Workout. Were you into acting as well, workout? Man, I hate to imagine what it would have been like to deal with that whole AI thing where the movie companies own your likeness. That'd be it. You only have to do one movie with them and they own your likeness and that's it. They got you for life now. Once you sign that away, your voice and everything. Man, that whole AI thing is scary from an actor's perspective. Okay, I'm going to go a few more minutes and then I'm going to be calling her quits at 1 o'clock. We've gone through lunch hour here. And this is right usually when I get out of here is when it starts to do some moving. Keep in mind, we have not reached my little guy down here. Do not count me out yet, my friends. I might be able to get my little run in here to get back up there. We're right inside this reversal now. We finally come up, hit it, come back to a discount, come up and hit it, filled it. Now I'd like to see this run all the way through this range, take this guy out and get back into a discount range, go from that guy to this guy. You see how this one here, when we broke it to the upside, you came back, get an opportunity, the first one I got in on to go long. You had to waver through all of this before you finally hit the level I was talking about right here. And it perfect fill. Now, if it reverses and comes all the way back down into here, you'll get to see why this happening here was the same thing that happened over here. Reversal to this imbalance I talked about, this imbalance, reversal to imbalance, all the way to the top, to the reversal. See the little wick go above it again? Come all the way back down into this guy down here. So discount array again inside the bigger range, discount, then ran all the way back up to here, create this one here, run all the way back up, hit it, come all the way back down again. That's ideally what I'd like to see. So it's a rinse and repeat. Even inside this consolidated crappy day, it's not so bad, hey? Not so bad, not so bad. And if you did get short there, I'd be slammed up right against break even right now, and I'd be laughing because you're in profits. Like if you entered in there, I'd be like full on close of that sucker. I'd take 22 to 30. There's 7 handles right there. Just drop to the top of that. There you go. Now you got 12 handles. I would drop to this one. Take a whole bunch more handles. There's no way I would let that lose. I would lose off of that. I would trace it right to the top of that candle there. And as soon as it hit that guy right there, I'd be paying myself there at 29. So you've got 26 handles to there. And there's multiple 10s I've given you in here. Big runs I've given you in here. Plus 26 handles when it makes it to here. Even in this consolidated day, you guys have still been able to see places where you could still nibble 10 pips out, like Derek was saying. You take a little bit of run 10 handles here, 20 handles there, and stay inside these little ranges. Grab yourself a discount array. If you see it down there, grab it. Here's your inversion. You took that swing, drive through this. There you go. There's your 26 handles. Keep coming through here. That's it. Drive on down. Come on down. I'm hungry because I'm looking at carrots. You're absolutely right. I had carrots last night, funny enough. My wife made dinner and gave carrots, and I was expecting to be cooked. I was like, I bit into them so hard and fast thinking they'd be soft. I was like, oh, and they were kind of bitter, and they were like fresh type carrots, right? But I'm like, nah, they don't make carrots like they used to. See how the mean threshold here holds price again? Breaker. I tell you, breakers are super strong. Pay yourself at the breaker. If it comes back up and hammers through it now, I'm all right with that. If it comes back into that small little range, where in that little range is your price action? You're between here and here. So you've got that low, that low. So you got mean threshold, hit it already. So if we come back up and just tap right here and kick off that right there, see that? Kick off it, come back down. That's that same game I just played with you before. You hit the mean threshold of this one, but you only tapped the wick of that one. So who's weaker? Mean threshold, I guess it's going to come up to the mean threshold of this one now. Swing point. You're between here and here. You absorb him into this candle, I guess. Snap off of that. if that's a breaker through this swing point here, you touch it versus dig into the mean threshold. They're not going to leave this untouched. They're not leaving that untouched. Come on down. I worked at a construction company for Winnipeg. Jobs all over the place. What did you get? Maple Leaf Construction? Who were you working with? My buddy used to work for a construction company. His name was Tex Mataxas. I worked construction company. Yeah, when I was a kid, I was cast as a support character in their show Degrassi Next Generation. Oh, no way! Awesome. To my folks, but my folks wouldn't let me. My uncle was in Cocktails with Tom Cruise and Gorillas in the Mist with Sigourney. Oh, nice. I was in Mob Story with Margot Kidder, John Vernon, Al Waxman. I remember sitting, I remember getting the casting director put me in. I was just another extra at the time. I was in the University of Winnipeg, and I got to be an extra in the show. And they said you can be a New York cop, and I'm like, okay, sweet. So they sat me in this chair, and the lady says, your hair's too long. We'll get them to cut it. So just sit here. So they sat in the chair, and then Al Waxman walks in, and I'm sitting in his chair. And they're like, oh, I'm sorry, Mr. Waxman. He's like, it's okay. It's no problem. And she's just like, wah, wah, and she's just butchering my hair, just like trying to get through it. She felt so bad that I was sitting in his chair, just butcher, butcher, butcher. And I'm like, what? She goes, oh, we can hide it under your hat. I'm like, what? You could have done that before then. You're not even going to see me. I'm in this like really wide, deep shot. They're shooting from way up on top of this balcony, and you can see me in the crowd. I freeze the frame with my parents, and I'm like, that's me. See that little dot right there? That's me. I'm in a movie. And my parents are like, great. I'm like, and that's why your hair's all butchered? Yeah, you can't even see my head, let alone the hair. I'm in this crowd. And then I followed that camera everywhere it went. I was like hell bent on being in the camera. And you'll see me walk past the screen in Mob Story. And it's Mob Story, the Winnipeg version of Mob Story. So yeah, that was my big first movie debut. That's awesome. Cedar Crest. Oh, okay. Yeah, I still love doing community theater. Yeah, Winnipeg has a good theater community. I was part of a group called Townhouse 9 Productions back in the day. Look at that consolidation. Hey, wow. Wow, I picked up some people. 661. 661 people. I think that's amazing. It always shocks me. We have so many people popping in. It's incredible. We might even break 1,000 people this year. We break 1,000 people for my birthday. That'll be awesome. There we go. Come on down, my friends. That's called teasing me. You see how that just comes down and says, whoa, 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 is there an order right there? Slow down, boys. Let's not go rushing in there and take his order. Let's just make him wait just another little while longer. And now all the stop losses are down here. Okay. So let's stick with the rules. The rules are down here for a reason. So if we charge through this order and then through this order, and the wiggle room I have to give it is here and potentially this order block here. I don't want to do that because it's a mitigation block. It's not a breaker. It didn't break anything in here. So it's a weaker candle. So I got to be careful that as soon as I see this one trade below here, if a body trades below it and comes back up, then I'll get out. Even though it could just come down into this mitigation block, turn around. And then if it does, then I'll just wait for it to get above here again, and then I'll get in on it to go back up. Trade plan, see? Have your plan set up for what you want, and then where does it fail? If it fails, this is where I'm getting out. Before my stop loss gets taken, here's how I'm getting out. Set up your plan before you do it. Then there's less stress. Then there's less worry, because then if it fails, you know why it failed, because you've studied price action to the point where you go, no, if it breaks back above this again, if it breaks below this, then its chances are it's going to go even lower and start digging down into there, and I'm not going to get my infamous blue candle or the blue zone, right? That's okay. Then just change over. But if it does come back into this range again and give me an entry to go long, then I stay in it. And then I'm going to pull that stop loss up tight because I want to make sure I'm just collecting small little runs on liquidity. I'll try and drive for up high, but there's not a lot in the way here that's really going to give me a lot of support. See how it's come down to the bottom of that right there. Denied. 8725. 0.75 of a handle. I was denied 0.7 of a handle. Well. There are more fish in the sea, my friends. More fish in the sea. There was really nothing in here that gave me a... Now, you run above this breaker if it comes back inside it. Start running for old highs. Still waiting for my... This is yet to be hit yet. So we finally cleared out these lows. They swung the lows. This is still in a discount. Super discount, discount, premium. Wow. I'm thinking, why did this not come down into here? And I'm thinking, well, that was in a discount though. See, 50%, you're still in the discount. It just came down into it. Body's respecting it here. And then running back up into, that's all it needs. It doesn't have to come all the way down into the lower range and get in the discount of the discount. It just needs to be in the premium of the discount. and run back up into premium of the premium. Okay. I see why that didn't, it's not. So when you see this, it didn't work out, go, oh, well, it didn't work out. Well, why didn't it work out? Okay, I see. It's because we're in this tight consolidation. You just went premium to premium discount. You're in a tighter range. So if this just runs up into discount premium, discount. Now if it rolls over here and comes all the way back down to here, that makes sense for me why it went premium discount, premium discount, discount premium to discount. Okay, that's going to be it for me, my friends. I will see you guys on, I guess, Thursday. Best of luck all to you all. Stay frosty, stay really crisp and clean on your thing. So what I'm kind of looking for tomorrow, if this just stays a small little candle today, which I'm kind of hoping it does now, stays a small candle tomorrow, pop up here, give me my damn wick for the day. Perhaps a run back into these old lows right here. Here, let me put this out here. This is the daily thing. So I'm looking for till I see you again on Thursday. So I want to see it run back up into here. So if we have this one small candle close today, come back up, just hit the edge of this inversion, get short from there. So look for a setup for a short off of this high here. If that hits tomorrow morning, if it continues to run up and does not give you your inversion, look for a reversal at this candle here, at the bodies right here, these little swing points here, that body, the mean threshold, the close, the imbalance, the high. Those are all the places I'm looking for a reversal to happen. And we'll see if how close I am on Thursday, how well I did. So that's what I'm looking for. Anything that gets you a reversal into this area again. A lot of people think this is just going to run all the way back up. If we close above, anywhere above here, and come back to it, then I'm in a reversal pattern. This reversal we got to here and taking out these lows that we finally got off of this guy here. That happened yesterday and today, or yesterday and the day before. If we, this reversal here is now coming back to this potential reversal here. So if we run here, I'm going higher inside the mean threshold of this candle, blah, 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 all those things. And you're literally between this guy and that guy, which is what I'd be looking at if this was a 1 minute chart. No different. No different. So this is a 1 minute, we'll pretend this is a 1 minute chart. I'm looking for the next candle to tap this, get support, and start coming back down for continuation on the downside, running here and here, this mean threshold, that low, this fair value gap high, consequent encroachment and low, same with that, equal highs, all that kind of stuff. They're way down there right now. We're not aiming for those PD arrays just yet. I just want to look for a reversal at specific levels. So you'll know the levels I'm looking for tomorrow. Here, and this imbalance here. And if we close, if we just wick up into that and then come back down again, this becomes that fair value gap we're looking for here to here tomorrow. And that becomes the linchpin. Either bounce off of it and drive down, or drive above it and go back up it, and we're getting back into this range again. But that will be the linchpin for me, higher or lower. This is going to sit still. I don't think you're going to get a big run up there. If it does go tearing all the way up here today, that kind of changes things up a little bit. I don't see this closing in today, but if it does, that would be crazy run up in the afternoon. Anyway, that's my play for tomorrow. You guys, good luck with that. I haven't I haven't seen your, where I won't see your trades. So be frosty. Always have a, always have a fail safe. Plan your trade, trade your plan, look for failing points. Where would it fail? And if it fails before that, then go back and it's not failure, it's just feedback as to go back in and figure out where it was that the trade failed. And if you have problems with that, send me a screen capture of the scene and say, look, I can't see where this failed. Where did I fail? Or where did this trade fail that I'm not seeing? And I'll be happy to help you out as best I can. There's plenty of people in our community that can help you out. So unless you want to figure it out yourself, that's cool. I respect that as well. Anyway, until then, I will see you guys on Thursday. All the best to you. And I'll see you all in New York, or from New York.